to our Mind Over Markets podcast, episode number 11, Emotional Awareness. This is George
This
Babs
place is buzzing with tension.
and
How are you
Mark
planning
Borsch
to
from
tackle
Trade Pro
those
Academy.
enemies
And
lurking
today
in the
we have an
shadows?
exciting episode for you. In the last episode, we talked about the power of decision-making as human beings and as traders. And I hope you learned a lot in that episode. There were a lot of key takeaways. If you'd like to learn how to make better decisions, how to process decisions with information as a trader and as a human being, the impact it has on you, we suggest going back and listening to that episode. But today, we can get started with emotional awareness. All right? So why is emotional awareness important? Because emotions help you determine your decision-making process and to a large extent how and what we think about. All right? Emotions create thoughts. Emotions create intentions. All right? And all emotions are often based on our subconscious thought processes. So an emotion is as a result of something or a program that has been run. It usually does not precede it, but it's very interesting. So let's give you some examples here. Our lizard brain, all right, or the subconscious or unconscious mind, however you prefer to name it, is designed to react when there's a perception or threat to us because it is a protective mechanism. If you guys remember from one of the earlier episodes, the whole purpose of the subconscious mind is to first and foremost provide our safety and care for us, for our well-being and for our continuity, to keep us alive. All right, and perception in itself is a cognitive process that we're going to get into in a little bit. But in essence, if you were out hiking and come across a grizzly bear, Mark, like one that looks like Mark or me, I could sometimes look like a grizzly bear. All right?
Very grizzly.
What would your impulse be, Mark? Would you fight the grizzly bear? You probably would.
My ego would say to fight, but my subconscious would I'd probably be running before I even thought of fighting.
Well, if both of us were there and we saw a grizzly bear, I would let you contemplate fighting it. I'm going on the run. Just letting you know.
Good luck. Those things are fast.
It'll probably chase me. I would lose. But if you're out hiking and you came across a grizzly bear, your impulse is going to initially be to run, all right, to fight or to freeze. But it's an automated and initiated by perception of the bear and unconscious thought that the system's in danger and could be killed. So when you look at this and you're up against something massive, stronger than you, all right, something you're foreign and unfamiliar with, your subconscious right away gives you the signal to start running. All right, it's fight or flight mode. It activates your nervous system, shuts down your logical mind, your adrenaline hikes. And this fight or flight mode is what's going to get you out of danger. But this fight or flight mode is also dangerous for traders. And I'm going to let Mark talk a little bit on a real world example, trading example with that.
Exactly. So thanks, Georgie, for that little intro there. So we're going to go a little bit deeper here into an actual real world trading example. As you know, we are a trading podcast. So for the traders out there, let's say that you're sitting in front of your trade station, you're able to qualify a trade, and let's say that you're able to qualify a short trade at resistance. So you go ahead and you place your order, you get filled on that order, and then you put your stop above the previous swing high, which is a pretty common place to do it. All right, so the trade gets filled, and instead of dropping shortly after you get filled, it actually starts climbing towards that stop of yours. Now, as you're watching this happening, you might start to feel your heartbeat starting to creep up. You might start to feel a little bit of fear creeping on. And this is as a result of a subconscious belief that if you're wrong on this trade, you might actually be a bad trader and that you're going to lose all of your money. So this whole process might not be conscious. You might not actually be conscious of these thoughts in real time, but they actually trigger an emotional response from the subconscious of fear. So as the market starts getting closer and closer to your stop, that fear intensifies. Your heartbeat starts climbing. You might feel a little bit of sweat on your palms. And this prompts more thoughts, more fight or flight scenarios. All right. Now you're thinking whether you should honor the stop loss. Maybe you should move it a couple of ticks higher, give it a little bit of room to run, or maybe you just cancel the stop completely. You know, it's got to turn around at some point, right? So this choice to move the stop is caused by emotion, but the actual thinking behind doing so might seem logical to you at the time. And the reason behind that is, you know, if I move the stop, then I'll put myself in a better position to be right on this trade. That might seem logical at the time, but that's actually driven by emotion. So as you're watching price action climbing towards your stop, that underlying thought which is often embodies a pre-programmed childhood limiting belief about yourself. Something like maybe you're not good enough or you're undeserving of success. That kind of a belief gets activated. And then the system will perceive danger, and then it begins to react automatically, almost as if you have no control over this whole process. And so this is the exact point at which you must learn to identify and interrupt this pattern. All right, guys. So while it's not possible to detach the integration between emotions and thoughts, it is, however, possible to manage the feeling states that give rise to a trader's cognition in a given circumstance. So, guys, that's exactly what we're going to be focusing on in today's episode, the importance of emotional awareness as it relates to trading and how you guys can build your emotional awareness so that you can identify those patterns in real time and rewrite them to align towards your preferred outcomes.
That's beautiful. And I have a thought on this, Mark, before we proceed.
Thoughts are good.
Yeah, I'd love to talk and start this episode by saying this, right? Like sometimes we think the ideal trader is one who is an unemotional trader.
A robot.
Yeah, exactly. But if you remove all your emotions, you remove who you are. You remove yourself out of it. And you have to remember that while robots are efficient in executing, what actually creates a market is human emotion.
Mm-hmm.
And so we're trading human emotion, and we're not telling you to remove emotions. I think that when you look at trading in this industry, people tell you can't be an emotional trader. Well, you're a human being. You're going to have emotions. I've been doing this since 2001, edging on almost 20 years. And by jolly, wouldn't you know it, I still have emotions on a daily basis. Because you know what, Mark? I know we're recording this one. Look, feel my pulse. It's still beating, right?
It's there.
It's there. Slow, but it's beating. So if you're alive, if you're breathing, if you're listening to this podcast, you're a human being who experiences emotions. We're not emotions. We're not telling you to remove your emotions and become emotionless. The title is emotional awareness. We are saying to slow down and in the moment of emotion to be consciously aware of the emotions you're experiencing and to be able to control them. Because I just did some quick math while you were doing that piece there with the stop loss. One trade is usually where every single trade people, the emotions arise. And as you said, Mark, you start moving your stop and then you say, oh my gosh, I'm terrible at this. If I lose this trade, what am I doing? My whole career is down the tubes, right? That fear, that emotion around it. Well, I did the math. If you do 5 trades a day on average over the span of a 30-year career, you place 33,000 trades. One trade is 0.003% of your total career. So think about this. Having these detrimental moments of emotionality, about 33,000 trades on the back of one, seems ridiculous.
When you put it like that, yeah.
Right? Yet we do it every single day. So I think this is why we need to explore this topic a little bit deeper, because if we stop and we become aware of our emotions, we could now accept and work with them, change them, and improve ourselves on how we manage emotions. It's not about eliminating emotions. It's about identifying and managing them.
Yeah, I agree completely. And I think I'm sure you can, chime in at this point as well. But for me, what it was as far as changing around performance was realizing how much emotions and being aware of your emotions in real time actually have to do with good performance.
Right.
Because I've seen the days, I've had the days myself where it seems like I lost emotional control. And I think we discussed this on the previous episode where, I've had days where on average I do around 3 to 5 trades a day. I've had days where I've done 50 plus trades. And then I've looked back at that and I was like, I don't even remember who did that. You know what I mean? And it was only at the point where I realized, it's having a strategy, having risk management, that's all great. But the real holy grail is emotional awareness. It's being able to catch yourself in those moments, because it's great that you can qualify trades and, make some money here and there. But at the end of the day, how you can consistently start building profits is by consistently catching yourself in those moments of, fight or flight, and being able to catch yourself in those moments and having a plan as far as attacking, what you should be doing when, that emotional response hits. I think that's going to save a lot of traders in the long run. because, a strategy is one thing, but that emotional awareness is so huge because having a plan to, get out of a trade when it hits a certain stop, that's great. But if you don't actually execute that plan because of emotions, what's the point of having that strategy?
Absolutely, right? That's a fantastic point you bring up because you're almost separating the two. It's like the system and then the trader executing the system. And I think you could liken that to the example that we all want the fastest, nicest car. But if I get you Lewis Hamilton's McLaren, or is he switched teams, then he's a Mercedes now. If I get you Lewis Hamilton's Mercedes F1 car and I gave you the full manual book with every switch and everything that you could think of how to operate it, my money goes that you won't even put a time that's competitive anywhere close to the amateur league with that car, let alone Lewis Hamilton's time. So we put so much focus on the strategy, the system, the approach, and we forget in all of this that before you get the profit, you have to execute that strategy and manage the emotion. So there are some emotions we have to be aware of. One thing that for me personally is I know I get emotional in some trades, and I have something called an emotional stop. And we're going to talk a little bit more about a system in this episode that you can implement to prevent yourself from getting into what I call FOF trades, fight or flight.
Fight or flight.
Industry first here. You might have coined the term.
There you go.
We got to use that DJ sound effect here. Fight or flight. So, yeah, we're going to give you that approach shortly. But let's talk about the emotions. What are emotions? Because to be aware of your emotions, you got to know what kind of emotions you can experience. There's 6 basic human emotions, and then the rest of them are combinations of some form to some extent of these 6. The first one is anger, right? So anger is fury, outrage, wrath, irritability, hostility, resentment, violence. I hope you're not turning violent while you're trading, but these all stem from the root emotion of anger. And I think if we unpack anger in trading, it starts out with anger for the market.
Yeah.
Right? You're angry at the market. Why? How dare you do this and hit my stop? Which, now that you guys are trading psychology pros and you're taking this journey with us, that doesn't sound like somebody who's at cause, right?
It does not sound like somebody at cause.
Pointing your anger outwards doesn't sound like somebody at cause. So anger is an emotion that, to me, is an immediate red flag. If you're angry in any way while you're trading, this is one of those things that exits you out for maybe you take time out for 15 minutes, maybe an hour, maybe for the rest of the day. But this is an emotion you got to really be careful with.
Yep. So the second basic human emotion is sadness. And out of that, you can find grief, sorrow, gloom, melancholy, despair, loneliness, and depression.
A lot of D's in
the sadness. But this is definitely one that, as well, with anger, if you're feeling depressed, if you're feeling, desperate, if you're feeling gloomy, sorrow, it's not really an emotion that you want to have when you're in front of the trade station.
Right.
So we're going to give you guys some great resources as well as actionable solutions. But for the remainder of this, we're just going to cover the rest of these emotions here.
So, Marky, before we do, can we just talk about I think sadness is something that we experience pre-trade or post-trade, but I don't think we've experienced it within the actual trading session, right? I don't know if the majority of time you get sorrow or gloom during the day as you start. If you're starting the day with sadness, you're not going to create anything positive.
Yeah, I would say, I would probably agree with you that this sadness more often is a result of, taking some trades, as opposed to coming into the trading session feeling sad.
Yeah, and in a moment, you're going to find out which emotions rate the lowest to highest based on energy levels, and sadness is quite low on that list.
Yep.
So I want you to know if you're starting the day sad or you're ending it sad, something's not right. There needs to be some kind of healing that's done on an emotional, psychological level, and it's oftentimes something outside of trading. Because in order to allow trading to give you despair or, loneliness and outright depression, there's something else going on that you're associating to trading. But this is one you probably wouldn't deal with as much. The next one's fear, anxiety, apprehension, nervousness, dread, fright, and panic. This is probably the most common in trade during the trading day emotion.
Yeah, definitely looking at this list, I would imagine a lot of traders would be able to relate to fear the most.
Right.
Here. I know when I started day trading futures, fear was, I don't want to say it was constant, but it was something that you kind of had to learn to live with. At some point, first you start off with fear because you kind of don't know what you don't know.
Right.
And then as you get a little bit more experience, that fear tends to wire out in the sense that you get more comfortable with your trading plan. You get a little bit more experience, more, time under the belt, some experience, and that fear dies out because now, you're focusing on psychology, you're focusing on process, and fear really shouldn't have any place in your strategy. But as far as starting out, I know a lot of traders that they may not feel comfortable. They may feel like the transition from demo to live was a little bit too quick. And, fears, it's natural to have, but we're definitely going to speak on this one in this episode and in the coming episodes.
Yeah, we have a whole episode planned on fear. Like we could do 3 hours on fear right now, but
Yeah.
let's just say this. Fear is a natural cycle and is a natural part of it, but it's how we associate trading to fear that really creates a lot of dreaded outcomes. So we're going to touch on that later. The next one
is joy. So emotions such as enjoyment, happiness, relief, bliss, delight, pride, thrill, and even ecstasy.
Wow. Ecstatic. I have been ecstatic. I got to tell you something too. Like even extreme joy is something you probably want to avoid. The whole trading thing is to compress the amplitude. Those who don't know what amplitude is, like the severity of the lows and tone down the euphoria of the highs. Just to kind of smooth out that curve a little bit so there's no any wild gyrations up and down. I don't think extreme joy is necessarily a helpful thing either while you trade.
Yeah, I would argue the same. You kind of want to keep yourself in the middle of the field. Kind of like what Georgie said. You want to imagine a nice constant, just in the middle. What are those balls that you hit and they basically roll together? The physics.
Oh, the little yeah. I forget what it's called. I know exactly what you're talking about. You drop one, then the other one bounces.
Yeah.
Perpetual
exactly.
motion. Yeah,
The perpetual motion ones, right? So
something like that.
exactly. You don't want to be gyrating between, like Georgie said, the perpetual highs and the perpetual lows. You kind of want to keep it in the middle, right? So you don't want to be balancing extreme joy with extreme anger. You kind of want to keep yourself neutral. And so when we say you don't necessarily want to have no emotions, you don't want to be a robot, what you're trying to do here is to, limit the emotion that you get. Let's say if you hit a streak of losses, and even if you hit a streak of consecutive wins, you want to limit that emotion, because when you start to give in to that one emotion, you're taking away from the other. And that's what's likely going to come back. It's give and take, yin and yang. It's a universal principle.
Love it. And that's actually called the Newton's cradle.
Newton's cradle.
And you want to be the ball in the middle because that one doesn't move.
Exactly.
But yeah, 100%. You want to tone down the emotions. And I think that when you experience severe emotion or like emotion greater than what you do in the course of any other activity in your day, it's a sign of something going on. And I'll tell you what that sign is. Like you just picked up that coffee mug to take a sip of the tea, right?
I did.
What did you feel once you took a sip of the tea?
Warmth.
Warmth? Okay. But that's not like an extreme one. It almost didn't even feel like anything, right?
Just felt like a sip of tea.
That's the thing with trading. We got to get it to the point that you do a trade and it feels like taking a sip of tea. Not like that tea's going to ruin your whole career every time you sip it. Imagine trading was the tea in the mug, and every time you sip it, there was a chance that your career was going to get ruined. I wouldn't want to drink that tea.
Yeah, me either.
Anywho, a little bit of offside. The next one's interest. We don't have to cover that one. Actually, we should probably. Let's do it.
Let's give it a quick cover.
All right. Interest is acceptance, friendliness, trust, kindness, affection, love, and devotion. So you have to obviously be interested in this career and what you're doing. All right. Interested to sit down, interested to pursue your goals. You have to be interested to make life work for you. You have to have an active interest in your own development. Because when you're working a 9-to-5 job, it's so easy to blame other people for your progression, right? You're like, oh, I'm here because this project manager did this, somebody stole my idea, or like somebody else got my job. All these garbage politics get in the way. In trading, it's raw. It's you versus you. And you have to be interested to self-promote and self-develop. Otherwise, nobody's going to do it for you. And if stagnation in this industry leads to elimination. And the next emotion
is surprise. Surprise, guys. So shock, astonishment, amazement, astound, and wonder. Right? This is Also one of the more positive ones, and honestly don't think you should be experiencing too much surprise throughout your trading journey.
Maybe in a sim account.
Maybe in a sim account.
You're learning.
When you're learning, maybe if you experience a black swan event here and there. But at the end of the day, you shouldn't really be getting any sense of shock or even amazement if you're approaching this correctly. If you are following, stringent risk management, you've got a strategy in place and you're executing based on that, surprise really shouldn't be an emotion that you're getting outside of maybe getting positive slippage in your favor. That'd be a very welcome surprise.
To me, anyone that's surprised means that they didn't expect it and they weren't prepared for something. So even if Donald Trump tweets something that's completely unexpected out of nowhere, it's great because it creates opportunity. But I don't think surprise is the outcome of that tweet. You say, hey, look, there's an opportunity. Now I know what to do about it. You're not really surprised. But as you build experience, you're going to be less surprised about things. And at the beginning, don't let a surprise give you shock or astonishment. Let it create an opportunity for you on the chart. Watch it on the chart. Eliminate the surprise aspect and focus on what you do know because it'll make sense. The next one's disgust, contempt, disdain, scorn, aversion, distaste, and revulsion. Geez. I don't know.
This took a really dark turn.
Very dark turn. If you're disgusted from trading, you probably have gone too far against your subconscious programming and you've created a disgust pattern. There shouldn't be any contempt or disdain or scorn in this if you train yourself properly and give yourself a chance to succeed.
And the final one here, guys, is shame. So emotions such as guilt, embarrassment, remorse, regret, and contrition.
I have to be honest with you, I do not know what that word means. I've never...
Which one?
Contrition.
Contrition. I just read it because it's on the notes here. But
it's probably a shameful type of...
I would imagine so.
But anywho...
Yeah, let's explore that.
But as you do that, I'll talk the shame is probably one that is a sleeper type of emotion because shame occurs when you're embarrassed. Usually you don't embarrass yourself to yourself, but when other people hear of your progress, all right, or if you're guilty that you're losing money in the market and you could be helping with that money to feed your family, all right, that's when you start to get these very low grade emotions. But I'm here to tell you that if you're experiencing these last few emotions while you're trading, something else has gone wrong. There's an opportunity to work on your psychology here. All right, so those are the 6 basic human emotions: anger, sadness, fear, joy, interest, surprise, disgust, and shame. More than 6, by the way. It's 8. So if we scroll down, and there's a book that I absolutely love. It was here in the office. It's not handy, as you guys can see on the camera, but there's a book that I absolutely love. It's called Power versus Force, and it's by David R. Hawkins. And I'm going to put the link in the show notes so you could get a copy of this book. It's like $8, and it's the best $8 you're going to spend, all right, in your life. It's a fantastic book. I didn't write it, so I don't have a partial view on this. But what David Hawkins does here is he actually muscle tested these different emotions. So muscle testing is asking you statements and seeing how your body reacts. If it creates a strong signal, then your arm basically holds its strength and he can't push it down. You get to elevate your arm at shoulder length, get you to feel emotions and muscle test how you react to them. He did this with thousands of people. This is training Navy SEALs receive, a lot of high-end military operatives, negotiation techniques, etc., and a lot of law enforcement to know how to deal with these. But there's levels of consciousness. And the concept here with this book is that there's 2 types of emotions. There's ones of power and one's of force. And the thing about force that's interesting is force sounds like something we can control, right, Mark? You could say, if I'm forcing something, then at least I'm the one doing it.
Yeah,
right?
I would agree.
But here's the thing about force is that as long as you're forcing or you're applying force to anything, let's say you're pushing a concrete block for whatever reason, you're at the gym, whatever, those sleds that people push?
Oh, yeah.
So if you're putting force on that sled, it's going to move. But what happens the second you let off?
She ain't going nowhere.
Exactly. It stops. And whenever you get tired, that's it. So the idea here is there's emotions that you got to continuously, personally put in energy into in order for them to continue to be present in your life. And you're going to be surprised what those emotions are. The other ones are power. And these are emotions that you generally do not need to exert effort into, which give you true power. It gives you power without having to force it, which means you don't need to continue to give it power. Power is already abundant. It's natural. It's there. So let's go with the force one first. All right. These are from the lowest to highest emotions, which you need to force in order to continue to transpire. Shame. All right.
Guilt.
Apathy.
Grief.
Fear.
Desire.
Anger.
And pride.
So, Marky, isn't that interesting? Remember we said shame is the last one?
Yep.
You have to continue to be shameful towards yourself in order to feel shame. And you have to continue to make yourself feel guilty in order to feel guilty. You have to continue to force yourself to have apathy, grief, fear. Desire is even a force emotion. All right. Anger, you have to continuously apply force in order to be angry and prideful. The first word that gets you into power, if you stop forcing things and you stop and just start breathing and focus on the present, you start at what emotion?
Courage.
All right. Being courageous measured on a scale of 200, and that's the level above which you now have true power. You don't have to continue being courageous to have courage. Think about it. If you eliminate all the fear, grief, guilt, shame, desire, and anger and pride in your life, what are you left with? Courage, right? You're left with nothing. You have to do something when you remove all those negative things, because you're not spending time doing negative things. You have to do something positive. It's just natural. And you have to have courage to take that next step. So by stopping to apply force on the negative areas of your life, by choosing to stop focusing on who you're mad at, what you're afraid of, all right, how you're guilty for doing past things, what you're shameful about, forget all that crap, because it doesn't matter anymore. You stop feeling those things and you decide to do it. It's as easy as deciding right now, you're already at courage, all right? And look at that. Fear is gone. Fear of trading is gone. Fear measures at 100 on this level of consciousness scale. Courage is at 200. Then you go up to neutrality, willingness, acceptance, reason.
Love, joy, peace, and enlightenment.
And enlightenment is 1,000 on the scale.
Yeah.
When they measured people, like Mother Teresa was a type of person that would measure close to 1,000. So it's hitting enlightenment in life, I think. I mean, this is a whole other episode. I think hitting enlightenment in life is elusive. I don't think we ever get to that stage where like, ooh, because guess what? Then your life's over. What is there to be enlightened about afterwards? I think we're constantly working towards that. And, you know, over the holidays, I dealt with the situation. Maybe it's too early to open up about this, but in our family, there was a death on my wife's side, all right, in the family. And, you know, if I could give advice to anyone feeling any of the force emotions, I would tell you this. You look at Instagram, you look everywhere across the world, and it looks like everyone's doing better than you, right?
That's true.
And that makes us feel like total crap. Here's the thing. No one has it figured out, all right? Mother Teresa was just barely on the enlightenment level. And I ain't no Mother Teresa, all right? So these power emotions, all right, just you get rid of all the force. What you're left with is true and sheer power. And with that power, you could create anything. One of that being successful trading career. But that's such a low-level thing in the grand scheme of things, right? And this is what we're trying to get you guys to do, is to open up more than just trading on these levels of consciousness. So remember that. I'm going to post this chart with David Hawkins' permission. We're not going to ask him for permission, but I'm going to put the link. And if you go and buy his book, you know, it's all in there with the explanation. So he would make that trade-off any day. I would. So have a look at this chart if you're listening to this episode. Ask yourself overall, where are you in life at the moment? And then come up with a plan of how you're going to get better. If you're not measuring at courage or above, trading is going to be hard for you, because you're going to bring those extra emotions from your life into trading. And guess what you're going to create? The same thing that you already have. If you're an angry person in every aspect of your life, you're going to be an angry trader.
That's actually very, very true. Whatever emotions you bring outside of trading into trading, that's more often than not going to be the result that you're going to attain, right? Just like Georgie said, if you're coming in, let's say if you're a person that, we'll flip the script. Let's say you're a person that generally looks for opportunity. For example, you're an optimistic kind of an individual. That's likely going to translate into an optimistic kind of a trader. Whereas what Georgie's just said, if you tend to be an angry person or you're somebody that's kind of always pointing your finger at somebody else, I'm not at fault for this. This isn't my fault, etc. If you start getting lackluster results in your trading, guess who you're going to be blaming? Not yourself, right? You're going to be blaming external factors, and that's just not really a path that you want to go towards. So,
if you're blaming everyone else about your life, and it's something you don't like, and you blame everyone else, how are you supposed to make a change from that mind state?
Exactly. You're not giving yourself the control, right? The second you start blaming external factors, you're taking that control away from yourself to be able to do something about it, right? So that's basically what we're encouraging you guys here. First and foremost, we're giving you guys some of the key emotions, letting you know which ones serve you, which ones don't serve you, not specific to just your trading journey, but your journey as an individual. All right. And so going forward, Georgie's got a quick challenge he'd like to share with you guys.
Yeah, I really love this challenge. So download, first of all, go to our website, podcast.tradeproacademy.com, or if you like little gimmicky things, marketmind.online. It'll bring you to the same page. Look at the show notes of this episode. Get this grid, download it, print it, get this book if you can. Look at the emotions, learn them, because beside emotion, there's also a life view of how you view life. Ask yourself, where are you on this scale? Not judgmentally, because then you're getting into what? Shame, guilt, grief, the lower ones. Ask yourself honestly, if I was a third-party person looking at myself, where would I measure up? Where do I spend most of my day? Am I in a force or the power half? And journal these emotions when you're trading. And if you have a force emotion that overcomes you while you're trading, I challenge you in the next 2 weeks to stop trading for the day and journal it. Talk about it, why you're feeling it. And journal over the next 2 weeks, 10 trading days. What emotion are you trading in most of the time? And guess what that does? When you have a journal where you have to talk about, hey, today I was trading in an anger state. I know it ranks 150 on the scale, and it's an emotion of hatred. Why is this happening? All right? What are you doing once you're journaling? You're becoming aware of your emotion. And you're not here to judge yourself. You're here to pause, reflect, be emotionally aware, and then now we could start to work on things as we move forward. So that's a challenge for you for 2 weeks. Number one, daily journal the emotions you go through with the log scale of the level of what that emotion is. Put, is it force or power in the next column? And then notice over the next 2 weeks what amount of time you spent where. And if you spend most of your time in force, you got to do some personal development. If you're in the power quadrant, life is probably pretty damn good for you.
And so, guys, now that you have the challenge, let's take a look back at emotions. So regardless of which of those emotions that you might experience throughout the challenge, every emotion in itself consists of 5 main components, where each has a distinct function. And so these 5 emotions, or rather these 5 main components, are number 1, they're cognitive. So the cognitive component basically evaluates the event that leads into the emotion.
And the second one is neurophysiological. All right. And this is the process that begins to prepare your body to react to the event.
The third component is motor expression. This expresses or communicates your reaction to the event and how you will behave.
The fourth one is motivational. This prepares and directs your response towards the event.
And the final component, guys, is subjective feeling. This monitors how your body feels in light of the event that is happening.
And I'm willing to bet that through these 5, Mark, as you read through these 5, the first time I came up with this list is, well, I'll be damned. The one that I usually am the most aware of is what? Number 5.
Yeah.
Right? You're
subjective
aware,
feeling.
of how you feel because you're feeling it. That's something that's real. But before you hit 5, before you feel something, all right, the event is being evaluated on a subconscious level. Your body's being prepared to react to this event. Then it communicates your reaction to the event and how you're supposed to behave. Then it prepares you to actually have a response towards the event, and then you respond and feel the emotion. So a lot of stuff is happening before what you think is, I just started to experience this emotion. And so that's why we're able to change things before you feel the emotion on a neuro-linguistic programming basis to rewrite the code, if you will, before you get to the emotional level. Because if you could stop at 1, 2, or 3, train your subconscious mind, you'll never get the 5, which is the part where you're actually feeling the emotion.
Exactly. And that's exactly what we're going to show you guys how to do in this next little tidbit here, is how to prepare yourself, or rather, how to better position yourself in order to manage these emotions as they do crop up in real time. So Georgie and myself, we're going to share some of our personal methods, some of the methods or tips that we can provide to you guys with regards to how we manage our own emotions in real time when we are trading at our stations. So Georgie, I'll let you start off on one, give us or share one of your strategies here with the team, and we'll switch back over to me and I'll share one of mine.
Yeah, absolutely. My first and most important strategy of managing emotion, and I like, Mark, you said manage, not eliminate. Obviously, I want to bring that up to everyone. It was intentional. We're using the word manage. I use something called the MCM, Mental Capital Meter, and it's something I've developed for myself. The way it works is it has a component that's pre-trade, one that's in-trade, and one that's post-trade as well. So what I do is when I sit at the computer in the morning, I have a routine that I go through. Every morning it's the same if I'm going to trade. But by the time I actually sit down to look at the charts, the part that people give the most attention to, I've already measured myself, like what is my mental capital? And there's a lot of factors of what influences mental capital. Maybe I didn't get good sleep. Maybe I didn't get good food to eat the night before. Maybe I'm just tired for whatever reason. Maybe I just don't feel motivated to trade. All right, that happens some days. All right, I'm human. So all these things that come together in one soup, how mentally focused are you? This is game time. How ready are you to perform? That's the question of what mental capital is. If you were a coach looking at yourself as a player, how would you rank this player on their game readiness and they're ready to perform? Do they look focused and they're ready to do this? That's my idea of a mental capital meter. I go from 0 to 10. There has been very, very few days that I've been at either 10 or 0 or even 1 or 9. So really, to me, it's 2 to 7 most of the time. Again, you got to compress those peaks. And, if I'm anywhere above a 6, I'm good for the day. If it's anywhere 5, I'm cautious. Anything below 5 or at 5, I won't even trade that day. And there's been very few of these days, but I'll come in and I'll work the trading room. I'll talk to the guys in the trading room and the ladies, or Trade Pro FMs. But I'm not doing anything. I tell them, guys, my mental capital is low. I'm not swinging today. I'm not ready for performance mode. I'm not ready to risk my money for this opportunity because I'm not ready to capture it. Now, sometimes I'll start with a high mental capital meter, and as the day wears on, I'll lose that mental capital. And if I get back down to 5 or lower, if I start at 7 and I get back to 5 or lower, regardless of how I'm performing, I might have made the best day ever. But if I start to think about how much money I made, start thinking about cottages, boats, and other things, and I just get distracted, that's it. My mental capital is worn out. So no matter how much opportunity the market has or how well I'm doing and how I'm performing, my mental capital is slipping. So to me, I have a mental capital meter that qualifies me for the session and can disqualify me during the session. And as long as my mental capital is at 6 or greater, I continue to trade. If my mental capital is below, I stop trading. All right, so that's one of my fuses, if you will, of my mental performance, my preparedness. And the reason I use that is, number one, it keeps me from trouble when I'm personally not feeling good. Mm-hmm. But number two, it keeps me aware of my emotional presence. Because if I'm measuring it clearly, I'm reflecting. And if I'm reflecting, I'm aware of it. Right. And so this is my biggest number one tip. I have a mental capital meter and I talk about it often. And I measure it every day. It's a qualifier for the day and disqualifier as well.
Yeah. So similarly to George, I have very similar concept here, and George is actually the one that introduced me to it, and we call it the traffic light system here in the office. And kind of similar to how George measures his mental capital at the start of the session, we're essentially doing the same here, but we're using Post-it notes. So the traffic light system is basically a green Post-it, a yellow Post-it, and a red Post-it. So very similar to a traffic light. Green means go, yellow means you can still go, but be a little cautious. And red means no go. All right. And so how you guys can use this system is when you get in front of your trading station, or even before you sit down in front of your trading station, take stock of your mental capital. If you're feeling good, if you've done your morning routine, if you've gotten your rest, if you've eaten well the night before, if you followed your routine to a T and you're ready to perform that day, you're going to come in with a green Post-it note. And a green Post-it note is basically following how your performance would be, if your mental capital is all there. So if you know your sweet spot for trading, for example, myself personally, I know 3 to 5 trades is where my mental capital tends to stay the highest. If I do any more than that, I tend to get rid of that mental capital really quickly, tend to drain it. If I don't do anything under there, I kind of lose interest almost, if you will. So I know that if I'm coming to the screen and I've got a green Post-it note on there, I'm good for 3 to 5 trades, at least 3 to 5 trades. That's where my mental capital is at for the day. If, for example, I had my morning routine, I follow my morning routine to a T, but let's say the night before I might have stayed up a little bit late and I don't feel like I got all the sleep that I need. And let's say before I sit in front of the screen, I'm not feeling all there. I still feel like I can get a trade or two, but I don't think that I'll have the mental capacity to sit there and try to qualify 3 to 5 trades. Then I show up and I use the yellow Post-it note. All right. So I'll still be looking to trade, but I know that my mental capital approaching that session isn't all the way there. So I'm already aware of my emotions, what my mental is or the mental capacity is at. And I know that I'm good for maybe 1 or 2 trades. If none of the above have been fulfilled, if I didn't do my morning routine, if I don't feel like I've had enough sleep, if I don't feel like I'm emotionally there, hopefully I didn't have a fight with my wife, but if I did have something like that and I'm not feeling emotionally stable or I'm not ready to perform on that kind of a day, that's when you show up with the red Post-it note. No mental capital means no trades. And this little system in itself, whether you decide to use the traffic light system or George's MCM system, this in itself should help you guys, especially the blow up days, because I know that the blow up days, every trader that's successful has blown accounts.
Oh, yeah.
And I can almost guarantee you the day that you've blown that account was a day where you would have shown up with a red Post-it note on your screen, right?
Absolutely.
And you could have prevented yourself from that. All right. So traffic light system, another great kind of system to use to manage your emotions in real time, even before you sit down. It's a great way to take stock of where you're at leading into the session and kind of as a guiding light really throughout the session. Because if that changes from green to yellow, this can also change throughout the session, right? Just because you show up with a green Post-it note doesn't mean it's going to stay green the whole time. Right? Maybe you got into some trades that you shouldn't have got into and you're not feeling there. Or maybe, the market's grinding slower or there's consolidation and, it's draining your mental capital faster. Just because you start with one doesn't mean you have to stay there. Ideally, you will be going from green to yellow. You won't be going from red to green. You wouldn't be going the opposite.
Right.
All right. So it's okay to go from, say, a green state to a yellow state to a red state throughout the session, but you shouldn't be doing it the opposite way around. If you start off with red, it's probably better that you just stay away from the screens for that day as opposed to just, all right, now I'm good to go.
Absolutely. If you're starting with red, learn how to get yourself to green before you start the day.
Exactly.
And I love this system, Mark, it's a prevention mechanism, right? It prevents you from losing money. And most traders don't need to make more money. Most traders just need to stop losing. And if you eliminate the trades that you're losing, you're automatically making more. Critical concept. And the sticky system really keeps you out. I have one to share. It's not this one. You can do this one. And this is my last one. This is a really important one. So if you guys remember, we shared 1 to 5. And number 2 is neurophysiological. Prepares your body to react to an event. This happens in the second step before you feel the emotion, which is the 5th step, which is the actual presence of the emotion. This is something I have that could nix this right here, right at this step. Prepares your body to react to the event. The third one is the motor expression. It expresses or communicates your reaction to the event. So when I'm having a bad trading day, I have a cue, a visual cue. Mark, what do I look like on my desk when I have a bad trading day?
When George has a bad trading day or a bad trading session, which I will say does not happen often, I've been trading alongside him for almost 2 years now in the office, and I've seen, I'll say two, I can say confidently, I've seen 2 bad days. And those days, because I sit right beside him, his DOMs are on the left-hand screen, so he's got 6 screens. Top left is where his DOMs sit. And if George is looking to the left side of the screen and not looking at me directly, and my computer desk is shaking as a result of his leg going off.
The leg bounce.
The leg bounce.
The furious, yeah.
I call him Thumper in the office here. If George is in Thumper mode, if he's looking to the left and he's got Thumper mode engaged, that's likely he's not having the best session.
Right.
He's not having the best session. That's what we've learned from George.
And it's super important because Mark knows when I'm not having a good session. That's when things really break down. But before I get to that phase, I notice things. Like one of my first things, I get a little bit more fidgety. I start clicking the mouse more, even though I'm not actually clicking anything. You know what I mean? I'm moving my leg around a little bit. I'm getting anxious for the next trade opportunity because that trade is probably one that I'm using to rescue lost money from the previous one. So once I notice this anxiety or like physiological body movements that are unnecessary, because think about it, an unnecessary movement is a waste of energy. It's a forceful move. It's not a move of power.
Huh.
So once I kind of get these forceful inclinations to do stuff like move pens and get fidgety, you know, I'm doing something out of line with what I know needs to be done. I don't have to know what that thing is. My unconscious does. It does the work for me. But I know that what I'm doing is not really in line. And I'll take a breather and take a step back. One thing that you could do is the 5-3-2 breathing method, which you take a 5-second in the breath, hold it for 2 seconds, 5, 2, 3, and exhale in 3 seconds. That'll really restore calmness. The other one is, I do this one a lot. When you catch me looking at the top screen, Mark, I'll just look upwards at the screen and not necessarily look at anything. And if you look at 45-degree angle on anywhere, like try it now. If you're driving, please don't. But if you're somewhere where you could try it, remember to try this later on tonight or today, whatever. Look at the wall and then expand your things you're looking at. Look more further to the side and further till you get like a really wide view. But go up 45 degrees on the eye slope and expand everything, and you get this like calmness, this presence. This is called Hakalau. It's a Hawaiian state of like just calm. You know, it's the just existence here in the now, the present moment. That removes all anxiety. I'm back to being restored, calm, calculated. And to me, what this tip here is, first of all, know what your trigger is for something bad about to happen physiologically. Might be your chest travels faster because you're breathing deeper. All right? Might be you're slouching in the chair. Know what your physical trigger is that leads to trouble. And then in response to that, how are you going to exit? What's the exit strategy? To me, that's looking up at the screen. Try it. Super helpful. It works for me all the time.
Huh. That was some interesting tips that I might even try out myself there. I know that kind of similar to George, I notice that when I start to fidget a little bit, that's when my discipline starts to dissipate a little bit. And so we've got a fidget spinner in the office.
We should use that.
Which I do use here and there. I know Vic's taken that from me, and
we'll get you a fidget spinner.
He's found a great use out of that fidget spinner. But yeah, that's a great point, Georgie. And I will, I guess, summarize with another one of my tips, and this is something that I do quite often, and that is called just session check-ins. I call it session check-ins, and what that is simply keeping a notepad, by your trading station throughout the session and checking in on yourself every 15 to 30 minutes or so throughout the session.
Love it.
All right, and so what you're going to be doing is you're going to be asking yourself questions such as, am I still mentally sharp? Am I feeling in sync or out of sync with the markets? Am I missing trades? Am I hesitating to execute? These are the things that I try to notice throughout the session because they lead to certain emotions, right? If I find that I'm missing trades early on at the start of my career, I know that I'd be chasing them. But
right.
if I'm missing trades early on and I'm noticing myself getting frustrated, that's my cue there to kind of step back. And just like Georgie said, if you notice these, whether they're psychological or physiological cues, that's essentially what we're trying to get you guys to identify. Is if you guys can identify those, have a plan for when they do creep up, right? If you find yourself getting frustrated because you're missing out on trades, or if you're starting to hesitate on execution, maybe because your first trade was a loser, you're identifying that in real time and you're pulling yourself out of it. So whether that's taking 5 minutes, taking a 5-minute breather, whether that's taking a quick walk around the office, your home, whatever it may be, or whether that's, 2 minutes with a fidget spinner, It doesn't matter what it is, as long as you can identify that in real time, remove yourself from that, from making that error by having a plan and then coming back to the screen again with a green light or a green post-it note saying, all right, I'm good to come back into here. Let's get after it. All right. So
Love it.
knowing yourself is super important. And it's really, like I said at the beginning of this episode, emotional awareness was something for me. Once I realized how important that is, that's kind of what changed it around for me. Because strategy is important. Risk management is important. Don't get me wrong. But emotional awareness is really what makes the successful traders from the retail amateurs. Is retail amateurs focus on profits, and the professional traders, they focus on risk and they focus on managing their emotions.
Fascinating. Now, you know why I think it's so hard? You know why I know it's so hard for most humans to be emotionally aware?
Why is that?
Because a lot of us, and ask yourself as you listen to this, do you live in the past or the future or in the now? I think a lot of people are living in regret. Remember, that's a forceful emotion. All right. A lot of people are daydreaming in the clouds of the future. And in neither of those two are you able to pinpoint your emotional aspect. It doesn't exist yet. The past has already happened. So you're dwelling on past emotion and you're recreating it today, which is worse than not having any emotion. But if you're living in the future, you don't know what you're going to experience. So you don't know what emotion you're going to have. The only place to really feel emotion is here in the now. And most people aren't here in the now. And while you're trading, you have to be here in the now. You can't be shifting your mind to regret of your past trades or way too optimistic. Like we said at the beginning, tone that amplitude down. All right, shave off the highs and boost the lows.
Exactly. So remember, guys, maintaining awareness of your emotional nature as a trader is really the first step towards developing a peak performance state of mind, specifically for trading. All right, guys. So by developing your emotional intelligence and awareness, using some of the solutions we've offered you guys in this episode, you can now become proficient at managing these emotions as they trigger in the moments that challenge where the outcome is uncertain.
Awesome. And if you like this kind of work, and if you like and you value the ability to change yourself and believe that changing yourself can have the greatest impact in your results, our trading psychology course is all about this. We get you to start by living a cause, and through proven NLP, neuro-linguistic programming techniques, we get you to shift your beliefs, your mindset, because then that creates the identity that's going to serve you as a trader. If you have the right identity with the right beliefs and values and the right actions, it's impossible to get anything but becoming a successful trader if you code yourself the right way. So we have a trading psychology course that utilizes advanced NLP techniques taught simply and easy to apply, and how to beat the self-sabotage cycle. Check out tradeproacademy.com. Check out a trading psychology course. It's included in the elite package. All right. It gives you the ability to make a fortune, and it doesn't cost one.
Exactly. That's awesome. So everyone, that is all for today's episode. I hope you guys have enjoyed this one. Thank you so much for listening. If you guys can think of one person in particular that might find today's message really helpful on their trading journeys, please feel free to share this episode with them. Also, if you guys do enjoy listening to this podcast as much as we enjoy putting it together, please go ahead and leave us a rating and a review on iTunes. We'd really, really appreciate that. And that would really help this podcast grow through a community of international and global traders. So until next time, everyone, good luck and good trading. Take care.
And goodbye.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Hello and welcome back to another episode of Mind Over Markets. This is your hosts, Mark.
And this is George from Trade Pro Academy.
And we're happy to bring you guys episode number 12 of the podcast. In this episode, we are going to be focusing on the fear of loss in trading. So without any further ado, let's go ahead and get into the episode. So, as you guys might imagine, humans tend to be quite protective of their acquired wealth, and, quite frankly, rightfully so. It's been said that fear is 3 times greater than greed. So, losing $100 would actually hurt 3 times as much than profiting $100. So, when an individual decides to enter the trading industry, their natural tendencies are to be defensive and emotional when that capital is on the line. The issue is that as a trader, you're going to have to get comfortable with losing money at one point or another. Losing is really part of winning as a trader. So if you don't learn how to lose properly, then you're going to likely struggle to make consistent money as a trader. And so that's exactly what we're going to be focusing on in today's episode, overcoming the fear of loss in trading.
Awesome. That's great intro, Marky. I'm really excited for this episode. I think this one's very important part of trading that everyone kind of goes through. And I would probably even say that you never really fully transition out of having a small fear of losing money in trading. I mean, it's always there. It's there in my mind as well. Not every single day. It doesn't consume all my thoughts, but I think that's just a natural process. Would you say you're the same? I guess at the beginning, the fear was probably stronger. And then as you do it more and you gain experience, the experience displaces or pushes out the fear, if you will.
Yeah, that was exactly my journey with fear. There's obviously still somewhat of fear. You can't really kind of nix it in the butt, but there's definitely a lot less. You definitely feel it a lot less now, especially for myself. It's been almost 2 years, and I remember when I started, coming into the office, not as confident with the strategy. Obviously, did some back testing and all that, but transitioning from that demo environment to the live environment, there's still going to be some fear. No one's perfect. No one's just going to be bulletproof, ice cold robot veins. There's always going to be fear when there's money on the line, but it definitely does subside as you get a little bit more confident and you start to get more, more data as far as your actual trading strategy, your results, and it just becomes a lot easier to manage as you go with time.
Yeah, and I think fear is one of those things as a new trader. I'll tell you this, it's okay to have an emotion of fear, especially at the beginning, because it's a big unknown for you, especially if you're somebody who's used to making consistent income through a 9-to-5 job, right? And you've had that security blanket. The income's been every 2 weeks, how how much is coming in the mail, and you've based your whole life off of it, right? You've pretty much, that's your guiding principle for security and safety. So at the beginning, when you're doing something that has variable income component, if it's your first variable income job, then it's very natural to have a little bit of fear around it. And I find that the fear really kicks in even more if you consider using trading to become your main source of income.
As a sole or main source of income. That's definitely.
I think that's when the fear really kicks in. At the beginning, when you're doing it as your job, or you have a full-time job and on the side you're day trading, it's still cute. It's fun. It's something you're doing it's like a hobby almost. And then when you realize, hey, my mortgage has to come out of this trading account, the pressure's on. So I think that the fear at the beginning is natural, no matter what stage of your trading you're in. And in this episode, we're going to teach you what fear is, with the goal, ideally, of helping you how to manage that fear, especially when it comes time to putting capital on the line. All right, so like anything else, you always start out with the purpose of fear. This is Mind Over Markets, a trading psychology podcast. So before we even talk about fear, we got to talk about what is the purpose of fear. What do you think the purpose of fear is, Mark?
What is the purpose of fear? To keep you alive.
Keep you alive, right? You guys remember episode number, oh man, I'm losing track already. Yeah. It's one of those episodes where we talk about, I think it's episode 2. Functions of the subconscious mind.
Yeah, it could. To be honest, we get pretty excited with putting these notes together.
Yeah,
and it's hard to remember all the episodes we've done, but I think it was probably the second one sounds about right.
And in that episode, we told you that the whole purpose of your subconscious mind is to protect you, right? And so fear is plays an interesting component or an interesting role in that process. So first of all, fear is a complex chemical process in our brain. It happens chemically, all right? And the whole purpose of a fear is, if you look at your phone, you know how you have notifications. You open the screen, you scroll down your notifications, see what's going on, and you see, hey, I have 5 emails in my inbox. And you're saying, wow, I didn't know that, but now I do. So fear is like a notification process that alerts you of danger. So it's really cool to know that first and foremost, it's responsible for keeping you safe. Fear is not itself something to try to eliminate. It's a very, very necessary part of survival. I wouldn't want you eliminating fear. You know, we do a lot of psychology work with traders as well, and one of them asked me, how can I remove my fear of losing? I'm like, you don't want to do that. You don't want to remove your fear. We want to work around it. So it's responsible for keeping you safe. Without fear, humans wouldn't have evolved this far. We would have probably been slaughtered by a far bigger animal than us, or, you know.
We wouldn't have made it out. Yeah, exactly. We wouldn't have made it really anywhere. And if you were completely engulfed in fear, you probably wouldn't even leave your house, because I don't know if you guys have ever seen that show, 1,000 Ways to Die.
No.
There's a lot of ways to die.
More than 1,000, I'm assuming.
There's definitely more than 1,000 for sure. But yeah, just kind of back to that point, you know, fear, as much as you kind of want to mitigate it in trading, it's absolutely a requirement for your survival. So like Georgie said, we can't nip it in the butt, but we can definitely work around it and work with it so that it works in your favor as opposed to against you.
Well, so here's the question then, Mark. Are all fears the same? So to me, definitely not, right? I think there's two different types of fears for me. Now, this isn't scientific or any kind of research behind it. Me personally, you know, there's the fears that I know I need to follow. And then there's the ones that I know it's just kind of like a warning message.
Mm-hmm.
You know, it's like there's a fear that if I would turn a corner and somebody was sitting there threatening my safety, I would run. I wouldn't even have to think about that. And we're going to dig deeper into it. But then there's another fear that, you know, it's probably just a precautionary thing. It's not like it's going to be the end of life. And like you mentioned, if you really avoided all things that cause you fear, you'd sit at home. But then you'd be wasting your life. And then you would say, hey, there's no point of this life. And then you wouldn't be fearful of anything.
Yeah.
So interesting enough, here's how it works. It's important to know that for fear, we don't actually consciously trigger it. It's not like we sit there and we decide consciously, right now I'm going to be scared. Try it right now. Pretend to be scared. You can't. Unless you bring up imagery of a past event that scared you. So it's not something we knowing and willingly bring out in our life. It's an automated process.
Yeah, exactly. If you guys listen to the previous episode, you will have gotten a little bit of a brief on how the fear works, and that it's primarily a process that happens subconsciously. You're not really conscious of it pretty much until you realize it. You realize it.
For sure. And imagine that you were trained. You know those things where people sit in a chair and if you hit the baseball, they fall in the pool of water?
Yeah, yeah.
Imagine you had 1,000 years of practice to throw that ball at the target. Do you think you'd be a pretty good, you'd have pretty good aim after that?
After 1,000 years?
Of straight practice.
I'd hope so.
So here's the thing about fear as well. We're really good naturally at knowing how to be afraid. We know how to be afraid. It's not something we have to learn. And so we've perfected the process through thousands of years of evolution. But fear is programmed. So through evolution as humans, from the cave days to here where we are, it's all been programming through the past. And these programs have been built into us in one part of our brain that are automatically responsible for keeping us safe. All right, so the goal of the fear is to identify a danger and then get you to react to it so you could be in defense mode. All right, so in the brain, there's a lot of different parts, 5 main components or 5 areas of the whole brain that help you deal with fear. First one's the thalamus. And this piece of your brain is actually, it's in the core. It's in the middle. If you look at it, it's right in the center of the brain. All right, and it decides where to send incoming sensory data from your eyes, ears, mouth, skin, all your sensory points. All right, and then you have the sensory cortex, which interprets this data that you've received. So basically, your thalamus says, oh my God, I feel something that could be dangerous. Your sensory cortex takes that information and interprets it.
Yeah, by the way, guys, the sensory cortex is, just looking at the image, it's basically at the top in the middle of your head.
Yeah, and we'll post this image in the show notes so you can reference it. It's interesting to understand it. You know, we're going to talk about how it works in a moment, but it's interesting to understand the components, to understand the 5 different parts of your brain are responsible for identifying and reacting to fear and danger.
Yeah, these are the 5 parts of your brain essentially keeping you alive.
Exactly. It's a key function. And then the hippocampus stores and retrieves your conscious memories. So it processes the data in a context. All right. So if we work through the 3 so far, by the way, the hippocampus it's kind of like a U-shaped thing that goes around your hypothalamus. And we'll talk about that in a second. So think about this. Your thalamus decides, hey, there's some sensory data, sends it to the sensory cortex. It interprets the data, sends it to the hippocampus, which says, all right, what's the context of this information? Like, how do I feel threatened? Is this a situation where I should be threatened? And if it is a threatening situation, it sends it to the amygdala, which then decodes emotion and determines if it's a possible threat. And if it is a threat, what it's going to do is it triggers the hypothalamus to take action. And this is where the fight or flight response happens. So really, the amygdala is the key point, whether it determines, hey, do I release some kind of protective action, or is this something that I just need to store in a memory that isn't really dangerous to me? But we're going through this whole process for every single event. It's happening in the back of your brain. You're not consciously aware of this happening, but it's happening right now as you're driving, as you're listening. You know, can this podcast hurt me? It's coming through my ears. In the sensory cortex, it sends that info to the hippocampus. It puts it into context and says, last time I heard these 11 episodes, they haven't hurt me yet.
They haven't hurt, but they've made you money.
Yeah, exactly. They've helped me make money. So here's how the brain then creates fear. There's 2 paths of fear in our brain. This is really cool. So whatever the stimulus event might be, so it might be seeing a spider, it might be seeing somebody that looks threatening to you, it might be carrying some kind of object that's hurt you before. All right, there's something called the high road and the low road of fear. These are really cool. So the high road is a process that's determined by logic. So you have time to think about it. All right. So for an example, the high road part of it would be, let me give you an example in a trade context. I think that would help.
I would hope so.
Yeah. The high road goes like this. You're in a trade. You're down about $1,000 in this trade, right? And you're about $100 away from your stop loss, where you've predetermined you're going to exit.
Daily stop?
Yeah. And the high road way to analyze it is the sensory cortex is sending you information saying, I could see visually that my trade is super close to getting my stop hit, which then makes the loss full and real. It crystallizes the loss.
Exactly. Crystallizes the loss. Exactly.
And then you're thinking, okay, so then now what can I do about this? Obviously not move the stop, but you start to think, what action do I have? Should I take one contract off and reduce my position? All right. How should I learn from this? You're thinking logically, rationally about what you could do. That's what you call the high road. The low road is you're down $10,000. Let's make it more dramatic. And your account balance is $11,000. And so in one day, right? It's crazy, but
sounds like somebody who hasn't been listening to the Mind Over Markets podcast.
Yeah. And the low road is, oh my God, let me short as many contracts as I have left to try to get out of this without even thinking about it. So a low road response to fear is you automatically and unconsciously taking action. It's the difference between the 2 I told you about. All right, the 2 where 1 I know is essential for my survival, and 2 I know is just a warning mechanism, but I'm not really going to get hurt. My survival isn't at risk here. And so those are the 2 responses. The high road one starts first in trading, the high road of fear, because you have exposure to fear in small amounts. If you start out sim trading, right, there isn't even too much that you're risking other than the loss of time that you're putting into this. But as you experience a little bit of fear slowly, and then you go live and you lose your first trade, it starts to feel more serious, right? And now you start to fear it even more. And so in the next trade, even though you're afraid now of loss, you're putting yourself in the same circumstance that created the loss, and it heightens your fear even more. And you continue to do this cycle of being afraid to trade, but not adjusting your plan, not thinking about your trading strategy, just going in there and thinking you're just going to lay on some contracts and it's going to work out miraculously. And then you get served the loss again and again and again. And guess what happens? Now you take a high road logical fear and you turn it into a low road amygdala response. The one that says, oh my God, your survival is at stake. All right.
Yeah,
and once you do that, I don't want to use this word, but you're pretty close to being screwed in trading unless you get help. So you're going to blow out accounts. You're going to lose all your money once you associate what you're doing in trading to a potential of loss of capital so significant it affects your survival or your quality of life.
Exactly. And the worst part about it is you won't really know why. right? Again, you won't really know why unless you've done the psychological work required to know why this is happening, right? So hopefully you guys are starting to see the importance of psychology in trading and performance as well, because this is the game changer. This is the holy grail, guys.
And another thing too is we could look at fear as well with values, right? We could compare what fear is with value. So let's talk about the value, for example. First of all, like we said, fear occurs when you're in danger of something. So what is the danger? Losing money to some people is more dangerous than others. You know, ironically enough, to the person who hasn't had money in their life and has made it, they tend to be afraid of loss more than the people who have had it. And and that's a very blanket statement, but if you break it down, it goes down to your value. What do you value? Remember in episode 3, when we elicited Mark's values, I don't remember what they were. I'm sure I could flip a couple pages, but he was trading for the goal of making money, but joy and fulfillment, I think, were higher up than the actual financial gain.
Yeah, I think money was the last one. I
Right.
think it was my 7th or 8th one.
And so let's say your top value is safety or security. A lot of people is, they have that top value as safety, security. And the reason is, that there's some unfortunate situations where people haven't had much. I remember my parents immigrated. You guys are probably by the time this podcast is out, hopefully you've picked up a copy of the book, Path to Profit. And the first chapter, I tell you guys, when my parents immigrated to Canada, I slept on the bench of the Pearson Arrivals Terminal. I thought it was exciting. I don't know how my parents felt. I honestly don't. I should have asked them. But I would imagine they felt scared because everything they had, they gave up. Now, they're the Arrivals Terminal of a foreign country for the first time. So for me, that was excitement. But if your top value is safety, if all your life you've been taught by your parents, especially at a young age, don't take risk. Take the safe route. If you have a job, you work there till retirement. You'll get to enjoy your retirement. Don't run in there and get the ball. Oh my gosh, careful running. Run slow. You don't want to get there too fast because then you'll be a professional athlete. Like if you've been told by your parents to protect yourself and avoid danger, safety will be your top value.
I think, yeah. And I think especially as it relates to trading, little things growing up, such as, your parents telling you money doesn't grow on trees, little thing. It doesn't necessarily have to be with your survival, as far as having security and safety as your top value. But you'll also have people in those kinds of situations. That's like myself. My parents came over from Europe. Obviously, I wasn't born at the time, so I don't have the same kind of experience that George has arriving in Pearson. But they grew. They came to Canada, built a life for themselves, and obviously, we didn't come from a wealthy background. So they built everything up, and growing up, that's a lot of what I was hearing was, money doesn't grow on trees. You have to work for money, et cetera, et cetera. And so just because it's not necessarily something to do with my actual survival, little things like that can also lead to, you valuing or trying to hold on to or hoard any money that you come across. And that can also affect your trading, because if you're hoarding or if you're scared to use your money or to risk your money, then that's also, one of your top values would also be considered safety and security.
Yeah, and you mentioned two very awesome things there, Marky, is hard work and safety. I think most people will agree with you that their beliefs around money are hard work and safety.
Yeah.
They associate that with having long-term wealth and success. And that's so untrue. It's actually polar opposite, right? You don't have to work hard. You got to work smart. We work 2 hours a day trading. And, the income potential is more than most people do in their 9-to-5 jobs, spending overtime working for just 2 hours a day.
Oh, we know it's true. We see that in trading room every day. We've got people saying, we've made more in the most recent one. One of our members made more in 2 days than he did in 2 weeks.
Yeah.
And he doesn't make baby money.
Exactly. And so you hear that thing, and then what's the first response your brain gets is, that's BS. Show me a statement. That's what people start to think.
Yeah.
It's not because they actually want to see it. They want to believe it, is what they're saying. Because we're taught that, hey, I have been taught that that's something that makes it dangerous for you, that's risky. So how did you get that? And prove it to me, because I don't think it's possible.
Yeah.
And so I think that's an interesting thing. So it's hard work and safety are the two things a lot of people will say have been conditioned to believe about life and about money in general. But I'll tell you this. If your top value is safety, what happens when you do a variable income job?
It's tough.
Yeah, safety goes out the window, right? No matter what, when you sit at the desk, you already feel unsafe. You've been taught to take the safety approach. If you've been coded those values. Look, there's even research and situational analysis that shows you that people in the womb, when your mom was pregnant with you, whoever's listening, would experience or take values or learnings from things that happened to the mom while you were still in her stomach.
Wow.
So you could build a value of safety if your mom went through a very hard pregnancy for whatever reason, or if she went through a lesson where she took away the fact that safety is the most important thing to survival. Like, don't risk anything. Just go take less in life, but risk less as well. Be okay. Settle as long as you're not taking risks. You take the values away from that learning, even though you didn't experience the event. You experienced it through her. So when we get these values ingrained at the top of, let's be safe, let's not risk any money, and then we put ourselves in a variable income role, it's very tough to succeed. And we're going to have to do some work. It's not hard to succeed. So how do you succeed in that situation? I'll give you guys one huge tip, is assuming the risk and just accepting it. Look, what is more risky at the end of the day is risking some money with the potential to make way more, to live your dream life, all right? Or to work for an amount of pay that you know is way less than you're worth personally. Why is that? Because you still have a job. Nobody will give you what you're worth in life other than yourself.
What does JOB stand for?
Job.
Just over broke.
Just over broke, exactly. If people paid you what you're worth, all companies would shut down. There would be no profit. So you're being underpaid if you're working for anyone but yourself. So that's the number one thing that I realize. The second thing to realize is later on in life, as you're given the money and you're given opportunities, and suddenly now you get to be a little bit older in your human vessel body, and you get laid off. What's riskier than that? I've seen it happen. I remember working in the trading floor, and I had people around me that were doing a sales role, and they called us all in, and they said, look, this job is being eliminated. Luckily, I was promoted out of that job before it was eliminated, but literally two guys, and one of them was in their young 50s, one in the late 40s, and I remember working with them or talking to them afterwards, like, George, I don't know what I'm going to do. I literally am not going to get hired anywhere else at this age, right? Like, I put all my eggs in this basket. I had a 20-year career with the company, and one day just come in and told me to leave. And the guy didn't have too much money saved up. I felt really bad. But when I looked at that event happening, and I talked about this at the book market, I was like, wow, I will never let that happen to me ever. I would rather work 100-hour weeks and eat ramen noodles on the floor of a one-bedroom condo by myself, shaking in the cold because I can't afford the heat, to let someone else decide what happens with me.
Yeah, 100%. I think that's probably the biggest risk you can take in life.
Right?
What's that?
Not everyone agrees, though.
Not everyone agrees. No, not everyone agrees until it happens.
Yeah. And there's some people that are happy to say, I don't want to get paid a lot of money. I value the little things. I don't want to make a lot of money. Those are not the people that want to trade.
Yeah, that's not likely going to be the people listening to us here, right?
Yeah. So, look, here's the thing. I know the fear of loss in trading, it's a real thing. It's because it's a variable income, and you have to realize that the variable income, as much as it's scary, it's also an opportunity. All right? If you want to get, things in abundance, variable income is the way to go. If you look at anyone who's making the type of wage that you want to in life, they for sure have to be risking more than you are.
Oh yeah. Oh yeah.
Oh yeah.
Oh yeah.
So, all right. So give us some tips here of how to deal with when you get fearful in trading, Marky. What are some things that you could incorporate to deal or manage or cope with fear?
Sure. So I have a couple of things. Obviously, the first one is more based on kind of statistics, and that has to do with building confidence with your actual strategy. A lot of the times when we see, we see it in the room, and I'll see it, in emails that we get as well, is that people are fearful of losing in a trade because they haven't, tested their strategies in real time, or, back testing. For me, I'm kind of a numbers kind of cat. So I like to have numbers, and I like to lean on that. And so, whether you're a numbers person or not, it's still being able to back test or forward test your strategy and have confidence, having the numbers to back up that you actually do have an edge in the markets. That way, if you take a trade and you get stopped out on the trade, there's no reason for concern, because you know what your strike rate is, more or less. Your risk management, you're taking care of that as well. So from that perspective, you should be confident that you have an edge in the markets, and no loss or even a streak of losses should affect your psychology. The other thing is that when I do take a loss, sometimes what I'll do, depending on the market conditions, if the market's kind of moving slower, what I'll do is if I take the stop, I'll get up, I'll leave my desk, and clear my head, go out for a breath of fresh air, whatnot. And one of the other things that I've also done is to enforce a kind of like a time limit, a hard stop, if you will. So if I do take a stop, then I'll usually wait another 2 minutes. Usually, again, it depends on market conditions. If markets are moving, I'll be in quicker. But if markets are a bit slower, I'll usually give it 2 to 3 minutes. That'll give me some time to look back at the actual trade. I'll review the trade in real time after I get stopped out. Look at it. I'd review it, say, all right, would I take this trade again? If yes, okay, maybe look for another opportunity here. If not, this is probably going to be consolidation. I don't want to be part of it. So that's a couple of the ways that I've started to deal with the fear of loss in trading.
That's awesome. Those are great ways. And I can add one more as well. As one thing that people don't consider very often is using capital that they could afford to lose, that won't change their life. A lot of time we'll start out with $200 and we'll say, this $200 is just for me to learn. And then you lose $40 of it and you're like fight or flight response. Oh my God, my life's in danger. This was part of the plan. And when you use capital that you could afford to lose, what I'm saying here is when you deposit it into your brokerage account, you may never see this capital again. Will it change your life? And if the answer is yes, you're not mentally prepared yet to be trading. You have, if $200 is the difference between making your rent pay or not, you shouldn't be trading, with all due respect. If that makes a significant difference in your life, use it to ensure the safety of your life, because you cannot fight a fear response that's been engraved for you over thousands of years. All right. So start with an amount of money that you want to invest or trade that if you lost, it wouldn't change your way of life at all. And then as soon as you deposit in your brokerage account, pretend it's gone. It's done. You no longer have it. That way you could focus on the job, which is looking for high probability trades, and not constantly be paralyzed by the fear of losing a couple dollars here and there. It's part of the plan. All right. Another tip I have is to have a risk management strategy. A lot of the time, if
Sounds like common sense, no?
Yeah, exactly. It's simple enough, right? But if you don't know how much you're going to risk in any given day, there's a potential for you to risk your entire account. Right? If you've identified in this day my maximum loss is $200. All right. If you're still afraid, you're not afraid because the $200. You're afraid because you don't trust yourself to stop at $200.
Yeah.
That's an entirely different thing. So if you have a risk profile and you say, I'm going to risk $200 a day and my account balance will let me do this for a month, will I learn enough? All right. And if the answer is yes, and you can stop yourself at the loss daily, there isn't anything to be afraid of, because now it's a planned loss and not a sudden one. Nothing triggers the low road, it's a tongue twister. Nothing triggers a low road fear response like something happening that you never planned for.
Yeah.
That's the whole reason your amygdala exists, is to react to these things. But if you have a plan and you're following it, it doesn't trigger the fear response the same way. It triggers the high road fear response, the one where you could still have some logic and ration. which is, it's normal. It's okay to have that in trading. All right. I feel fear sometimes as well. A lot of times when I'm in over my comfort zone, sometimes I'll have, remember we talked about mental capital before? I'd be a mental capital of 6 and I'm trading size like a mental capital 9. Right? There's a little bit of fear saying, I'm not feeling 100%. Why am I trading so big? That's a fear, but that's not an amygdala fear where it's, oh my God, I start to sweat, my heart pounds, I'm moving around anxiously. It's a normal part of the day. And so what I tell you is, if you have money that you can afford to lose, if you create a risk strategy, how much are you allowed to risk every single day? What's the most you could lose in a week? What's the most you could lose in a month? And we help you develop this strategy as part of our futures trading course. By the way, on the website, we cover those points, and we even give you a risk plan, how to scale, how much risk on a daily basis. You've identified your maximum loss on a daily basis, and you commit to following that plan. There's nothing to be afraid of. The only thing to be afraid of is to be in your 50s getting laid off in a job from a company you've given your whole life to.
Exactly. And you know what? You control your trading experience. You control how things go. And think about this, guys. You guys actually control the risk of every single trade. So what is there to really fear? Instead of feeling fear, you should be feeling empowered and confident, because you can, like Georgie said, you can predetermine how much money you're going to be risking. So there should really be no surprises.
Exactly. If you're afraid, it's either too soon to start trading, or you're afraid of what you're capable of doing, right? You're afraid of yourself.
That's true, because there's fear of loss, and then there's also fear of success.
We'll in this episode we'll leave this as a challenge for you. Is if you're somebody who has their top value of safety, who believes, we all have the value of being safe to a certain degree, but if the top thing you value is safety, if you're willing to forego pleasure and return and positive things happening just so you're safe, or you have the illusion of safety, is oftentimes an illusion, then you're somebody who will have more work to do on a psychology level than your average person.
Yeah.
This is why we find at Trade Pro Academy, the traders who start and from at the very beginning and have the quickest development period are people who are entrepreneurs.
Yep. Entrepreneurs, sales leads, sales managers, really anybody whose role, whose legs feed the wolf.
Yeah.
Anyone who has a job that they have to hustle and they basically eat what they kill, those are the type of people that tend to come in with the right mindset from the get-go.
Yeah, listen, my old boss, when I worked in sales, I left my career in the sales role. My old boss said that, the reason there's 2 jobs in this world, sales and sales support. And he said, that's why you guys we have these awesome conferences and opportunities to go on vacation, and the accounting team gets a pizza party. You know what I mean? It's at the end of the day, do you want salad or do you want to put some meat on that? And if you're going to do that, you're going to have to go hunt it, because nothing's guaranteed or promised for you. And if you're somebody who values safety, I would get you guys to stop and re-elicit your values. Go to episode 3, elicit your values. Even if you've done it, it's been a couple weeks, values change, believe it or not. Not often, but they do. And if safety still comes up as number 1, you have to sit down and really think about it. And my next recommended step of action would be to go in to tradeproacademy.com and sign up for the trading psychology course, because you have to work on yourself. In one podcast, we can't really help you heal or fix that. But if you're somebody who sees opportunity and they're willing to risk something to get the kind of life they desire, trading is a great natural step. And, I'm not saying you can't make it if you're Sally from accounting, right? You certainly could, but it's going to be a rougher road. And I'm just being honest and real with you, because I remember my journey. I started out as engineering. And by the way, engineers, this is probably going to be another side rant, but should we do it?
Of course.
Engineers are probably the hardest people to become traders, to teach to become traders. They're just too rational. And I had an engineering background, and I'm a Gemini. So I was an emotional engineer.
Oh, boy.
If I could do it, you guys could too as well. So that's my challenge to you. Elicit your values. If safety is your top priority, then what I would get you to do is disassociate trading from safety. how you trade is not going to impact your safety. It has the opportunity to help you realize your dreams, but it will not sabotage you to the point that you're not safe. Right? You're going to be safe. You could lose a couple $100. You personally will be safe. And you can't afford to not do something for your future, because if we look at how the economy is turning, in the next couple of decades, Mark, this is a little bit of a aside. Totally gone off the show notes. Are you looking for where to go next year?
I'm looking at the show notes, and Georgie's throwing me a curveball here.
This is good. We had some show notes. They didn't flow as good as a conversation. So yeah, you look at where the economy's headed. I don't know if you agree or not, Mark, but a lot of things these days that were given that were safety jobs are gone or disappearing.
You know what? Even the jobs that aren't given, like I'm seeing robots are doing surgeries now.
Yeah.
Robots are doing surgeries. I just saw recently an article that Hollywood is using AI now to predict which movies to actually fund.
Wow.
Because there's some sort of algorithm that's got some sort of formulas that can apparently predict which proposals are likely to lead to star movies.
Wow, that's shocking. That's interesting. So AI will control the content. And last time you've been to the grocery store, I use self-checkout. I don't know about you.
Yeah, look at really anywhere. Look at McDonald's, the jobs that were safe. Now you go to McDonald's, there's maybe one or two people behind the counter. The rest is machines.
They're preparing the food, but there's
exactly. You look at Amazon, for example. You have obviously Amazon workers at the fulfillment warehouses, but if you actually look at YouTube videos of their warehouses, it's a majority is robots.
Yeah,
and that's kind of where it's going. And kind of further to that point, I think that there's never been a better time to get involved in this industry, because like we said, a lot of those kind of routine or mundane jobs, if you will, are being replaced, and a lot of people are starting to see the potential of making money online. Whether it's trading or any other form of entrepreneurship, there's risks involved, and there's always going to be a fear of loss. So whether it's trading or not, this stuff applies to real life. You know what I mean? It applies to real life. So
I have one more point on this before I completely tap off this episode. But so here's the thing. In today's society, with all this innovation technology, how we look at convenience is what we're chasing.
Mm-hmm.
You could be on the couch. You could be transcribing videos as your job. You could order Uber Eats right to your freaking couch these days and not move a single foot. You have these opportunities today that no one did. So even if you absolutely tank and bomb and, you consider yourself to be embarrassed, but you don't do anything, you just sit on the couch for the rest of your life, you still had it better than every single generation before you.
Oh, yeah.
There were people who would cut their finger and they would die in their teens, right? Like, what is there to be afraid of? This is why, to me, when we were doing this episode, it's like there's going to be one of two Georges that comes out this episode. The one that...
We got both.
Yeah, the one that follows the script, and this one that you're listening to. And I was like, there's nothing to be afraid of. I think fear of loss in trading or anything comes when we give ourselves too much of a self-importance. When we elevate our own meaning to this world. This is one viewpoint. I don't want you guys to take this as the viewpoint, but my viewpoint is, you and I, we really don't matter that much in the great scheme of things. Think about it, 3,000 years from now, who's Mark? Who's George? Who's Trade Pro Academy? None of this crap matters, all right? All that matters, all that we're here for, is to enjoy life as much as we can and to leave it a little bit better for the next generation than we got it, right? So what is there to be afraid of at the end of the day, right? Take a swing. In thousands of years, no one's going to remember this crap anyways.
Exactly. I mean, the way that I kind of look at it is, when I'm eventually on my deathbed, I don't really want to regret what could have been. And I just want to know that, I put 100% to what I wanted to do and follow that through.
Listen, I left a really good career that my mom was really angry about me leaving. And, I look back at it. I had a little bit of a health scare a couple months ago, remember?
Yeah.
I was driving to the hospital. Well, my wife was driving. And I told her, I'm like, look, if this is it, it's been great. And I swear to God, when I told her that, it wasn't dramatic or anything. I meant it. It's like, If this is all there was, I enjoyed every single moment of it. So here's the question is if you could answer yes in your own life to that, then don't change what you're doing. But if you can't answer no, what is a little bit of a fear of loss in trading going to do? We've literally seen so many people come in our trading community, come in, change their life. A lot of them have left and are doing it full time. And they're very thankful. They're grateful. But I'm just as thankful and grateful for them as well. So what I'm going to tell you is this. Put that stuff aside. You're going to survive. You have it. Today's world is so much easier for people than it was hundreds of years ago. Use that to your advantage. All right. Shelf aside the fears. If your top value is safety, you're going to have to realize that trading is not going to jeopardize your safety. It's safe. Today, there's literally anything you could ask for. There's medications. Our lifespans are increasing. Although, did you hear that? I think this is the first year that life expectancy has gone down.
Really? That's actually kind of surprising.
Yeah.
But not at the same time. Looking at the landscape of the world as it is. So let's just quickly summarize some of the, I guess we can call them not solutions, but some of the trading hacks or mindset hacks you guys can use to kind of nip that fear of loss in trading
I got to check my trade while you do this.
in the butt. Yeah,
I shorted the S&P. It might not have been a good idea.
By the way, he's shorting it at all-time highs. All right, guys. So these are the kinds of things that you will want to work on in order to start managing that fear of loss in trading. Number one, you're going to want to elicit your values. As we mentioned, you can do that, a nice walkthrough on how to do that on episode 3 of this podcast. Another thing you guys can do is to make towards motivated goals. That was lesson, I believe, 4.
4, yeah.
Lesson 4 was towards in a way motivations and how to start aligning your goals to be towards motivated. Another great tip you guys can use is to create a vision board with visuals of your success state. All right, so vision board is super important. I kind of use sort of an alternative of that for myself. I don't have an actual piece of paper, but I have an app where I basically put together a whole bunch of stuff that I want. And I sit on that every single morning and essentially visualize myself having those things. And you guys should do the same as well, because when you come to the screen and, if you do take a loss, you can sit back and in those 5 minutes that you do take away from the screen after taking that loss, that's exactly the kinds of things you want to sit and visualize on. All right. That'll bring you back into a positive mind state, into a mind state looking for opportunities so that you can capitalize on them when they do present themselves in the markets.
I love that point. Can I just mention one thing very quickly on that?
Only if you stay on script.
Yeah. Oh, man. Never mind. Keep going. Is that, it's not, in terms of fear in general in life, it's not that I'm not afraid. I just thought about how I kind of present myself this episode. It's not that I'm not afraid of things. Just I got a lot of stuff on my shoulders. I just don't have time to be afraid. And you just hit it right, the nail on the head right there. Is rather than looking at what you don't want, if you start focusing on where you want to go through vision boards, visualization, having goals, reviewing those goals regularly, the fact of the matter is life's too short you don't have enough time to worry about things if you're only focusing on where you want to go, because any moment that you spend worrying about something is a moment you're taking away from your future, which could have gotten you closer to those goals.
Exactly. And again, we're referencing back to previous episodes because the way that we've put this podcast together is for it to be, kind of building blocks towards becoming almost a superhuman trader.
Yeah.
With an awesome mindset. And so kind of to George's point, you want to focus on what you want. I think we talked about this in the second episode with regards to the subconscious. It's an order taker, and it's going to give you what you ask of it, right? So if you're focusing on losing, if you're fearful of loss, guess what you're attracting? You're going to be attracting the behaviors that bring that into fruition. Whereas if you flip the switch and you stop focusing on, a fear of loss, and you start focusing on, all right, I'm looking for the opportunity for profit, guess what's going to start happening? You're going to start seeing the setups that tend to result in profits.
To generate profits.
Exactly, that generate profits. So as soon as you make that connection, you flip that switch to starting to focus on opportunities, that's exactly what you're going to start seeing more of.
And, it's a fantastic point. Focus on what you want. Everything you have in your life is a result of what you've been focusing on. And that's beautiful because you get to choose today what you do want to focus on instead. And, there isn't enough time in this world to dwell on past. Let's use now because this is the biggest opportunity moment. Opportunity lives in the now. It's not in the future, the present, or the past, rather. It's in the present. So let's do something about it. You guys join us. When you're in a community, when you're playing on a team, this sport feels a lot less lonely and a lot more motivating and a lot more doable, tangible, because you see other people doing it as well that you could learn from. So that's all I got on this episode. I swayed a little bit off script. I hope you guys enjoyed it. We had other things planned, but we took it this direction. I think this direction was pretty good for me. I got a few things that I wanted you to get out of this, and I hope you've gotten there.
Awesome. So, guys, it's been a little bit of a long one, but that is all for today's episode. So thank you guys so much for listening. If you've made it all the way through to the end, we're so happy to have you on here, guys. We appreciate you. If you guys can do us a favor, if you think that there might be a certain person in particular that might find today's message helpful on their trading journey, please share it with them. Also, if you enjoyed listening to this podcast, please feel free to drop onto iTunes, leave us a rating and a review. And until next time, everyone, good luck and good trading. Take care.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Hello, trade pros, and welcome to episode 13 of our Mind Over Markets podcast. Today, we're going to talk about cultivating patience in trading. And we know that it's spelled with a P-A-Y. We purposely misspelled it. Our spell check in all the notes underlined it with red, but we overwrote it and went with it. In the last episode, we talked about the fear of loss in trading, and we covered about the purpose of fear, right? How fear works, the high road and low road of fear as well, how it's created in your mind, and how it can have detrimental really results in your trading, and how to overcome that and eliminate and really create an environment where you remove fear of trading. So if you want to learn more about that, episode 12 is a place to go. Before we start today and talk about the patience in trading, it's important to know that when you're having patience and exercise patience in trading, one of the most important aspects is having a well-structured plan. If you're being patient, you need to wait for something. Having a plan is very, very important for your personal development. At Trade Pro Academy, we have a program that's actually designed to take you through the education process in certain steps. You're not just starting out and being exposed to all the info at the same time. You're progressed through, and as you learn and apply, giving you the ability to get to the end stage in sequences and steps with exercises, quizzes. They're specifically designed for your success. All right, so before we begin, I wanted to mention that. Check it out, tradeproacademy.com, and get started with your trading development today. All right, I'm excited to kick off episode 13. Let's do it. This is George from Trade Pro Academy.
And this is Mark from Trade Pro Academy.
And let's kick it off today and talk about patience. All right, because I think patience is a very interesting thing, Mark. And one of the reasons I think we have a lack of patience in our world is really this culture and society we've built around instant gratification. Like, we can really get anything we want to us in a convenient manner with just money. No need to really go anywhere. Uber Eats delivers food.
Which we want now.
Yeah, which, let's see what the status is. We just ordered something. No, we didn't. But you get your food delivered, Amazon Prime, right? They're going to be airdropping stuff to your backyard.
They're going to be airdropping certain books.
They'll be airdropping the Path to Profit book, which is now out. So you guys check that out as well. We talked about that in episode 9 if you want to learn about the review. But It's all about instant gratification in our society. And I think it's a very dangerous thing, in particular, to see people, to be able to see the kind of success we used to have to imagine, be able to see it here today on social media, on other outlets of other people having it, to be seeing so much of it, also almost allows us to experience it before we even put in the work. And I think that's part of the problem we're having as a society. Now, this is not for us to solve, societal issues outside the scope of our trading podcast. But I think it's serious. It's a real thing.
Yeah, I would definitely agree. And you can see even some of those social media platforms are taking steps towards not necessarily discouraging users from using it, but they're not showing. I think the most recent change was the likes on Instagram. They're not showing that publicly anymore. So they are taking steps towards it. But really, the whole idea here is on instant gratification and how it's become such an important thing in society these days, and how we want things right now. Like Georgie mentioned, you can order Uber Eats, you can get that delivered. You want that right now. As soon as you click the checkout on Amazon Prime, you want that delivered right away. As soon as you send out an email these days, you want that answered right away. I want to quit my job tomorrow. I want to retire overnight. I want to buy a Lamborghini tomorrow. Instant gratification makes it very, very difficult to achieve the things that are worth having, right? And because anything worth having is not easy. That's pretty simply stated there, right? So a lot of what you guys see on social media is the exact opposite of what successful trading is, right? In this day and age where everyone's so focused on instant gratification, you're starting to see a lot of that on social media as well. You see people, starting with a couple $100. Fast forward a month later, that accounts, 6-7 figures. Just a lot of stuff that's not very realistic. And I think that is what drives, especially newer traders, to have false sense of expectation when they start this journey. And that kind of leads back to my point here, in that successful trading is opposite of what you see on social media. It's not meant to be done overnight. There is a learning curve, and there's a learning curve for a reason, right? Because if everyone can do it, we'd all be, millionaires on the beach, drinking whatever your poison is, if you will. So if you ask any successful trader what successful trading looks like, most will agree. You can chime in here as well, George. Most would agree that successful trading is actually boring.
When it's going good, it's awfully boring.
Yeah, exactly.
100%.
When it's going well, it's awfully boring. In fact, guys, a lot of the work that happens in trading is sitting and watching the markets until your edge presents itself, right? You shouldn't be feeling any sense of, your heartbeat shouldn't be racing as soon as you sit down at your trade station. You shouldn't be getting, goosebumps watching the price ladder moving up and down, when the market opens. You should have a process and a plan. All right. And so when I started trading, I learned really early on the importance of patience. What I thought was required to start making consistent profits in the market versus what it actually took, you kind of realize, oh man, this is going to take a lot more time and a lot more dedication and a lot more persistence, to be quite honest. I know that was my experience. I'm one person that found out about trading on social media. That was one of the first things. Obviously, the original story in the college class or in the university classroom, that's where I initially found the interest. But when I started looking at it more, social media is what brought me to it. And a lot of what I saw on there was that it's possible to get rich quick.
Yeah.
And that was the initial allure of it. And then once I started actually doing it, I realized how much of a journey it actually is. And if you want to stick around in this industry for the long term, you kind of got to drop that notion that this is going to happen right away.
Right. And it shouldn't, right? And I only laughed when you mentioned that, Mark, because I went through the same thing, except for me, because I did it so long ago, I wasn't exposed to the different ways of instant gratification, right? I didn't really see Lamborghinis, Ferraris, etc., because I was really limited to seeing success within my community only.
Yeah.
Right. And now you could travel worldwide. And the thing about it is when you look at Instagram stories or like Facebook pages that market this kind of lifestyle, you have to understand that the successful traders don't live that lifestyle. Right. They when you have all the money that you need, all the things that you thought you wanted become so attainable that they're not really worth it anymore. It becomes a higher purpose thing. And so, this is what I think, and this is why I commend you, Mark, because you kind of started in this environment where you were very motivated from external factors, which is okay. There's nothing wrong with it. It's just trading isn't like ordering Uber Eats. It's not like you see trading, you click trading, you've done trading, right? There's a big step in between. And so I think people are carrying expectations of convenience that they've built around them in their life, in this new way of life, into the trading realm. And that's not the reality. I've been doing this since 2001, going on almost 20 years. I can't believe it. 2001 in my head doesn't sound like that long ago, but I've been doing this since 2001. And I can tell you, I don't know one single person, Mark, that started and from day one's been making money. And I think that this is what we're going to talk about: patience in your trades, but more importantly, patience with your journey.
Yeah, that's a big one. And to that point, like I said, early on in my career, I learned how important patience is. And when you kind of think about it, from the start of the journey to, the journey never really ends. You're forever a student of the markets if you're planning on doing this for the long term. But it's interesting to see how patience plays a role throughout the whole journey, right? When you start, you don't realize how much patience you actually need to overcome the initial learning curve.
Yeah.
Right. And then once you start making a little bit of money, once you start going from not losing money to, flipping the paddle towards the consistently profitable side where you're starting to make money, you realize, all right, you needed patience to overcome the initial learning curve. Now you need patience to wait for your setup, right? You start to notice that as you become more consistent with your trading, you'll notice that more patience is required. You're not going to be, shooting your shots on every single opportunity. You're going to be filtering those out. And what do you need to filter those out? You need patience, right? You need to have patience to wait for those trades. And then once you start getting more profitable, you realize, okay, now I need to be patient to wait for my trade, but now I have to have even more patience once I get triggered into that trade, because now you got to be patient with the risk management, right? You got to be patient with it. And once you're patient, when you get triggered, you give the trade the potential to fully play out, and you can also maximize your profits. Right. So it's an interesting journey how it goes from, oh man, I need a lot of patience to overcome this, to, oh man, even more patience waiting for my setups. And would you have guessed it? Even more patience once I'm actually in the trade.
Right.
So that's kind of one of the reasons why, as you guys read the title of this episode, you'll notice the spelling of patience is a little bit odd. But don't worry, the Canadian spell check, that gets a green filter.
I emailed Webster. I'm petitioning to have them change the spelling and credit us. So every time you guys use the word patience from now on, it's 10% royalty to.
Exactly. Or even on Investopedia or something like that.
But you know what I like about this, Mark, that you mentioned? I think you've hit on a key point here, is that there's two types of patience. Patience with your career and journey with trading, and then patience within the actual execution of what your job is. Because if you're working if you own a business, if you work for somebody else, no matter what you're earning your bread with in your life, there's the patience that you have to bring with you to get through today. Mm-hmm. And there's a patience you have to have in the longer term to make it through the career milestones you're planning.
Yeah.
And I think traders could benefit from two types of patience, or it's actually two types of patience we're talking about. And I think that the one that the traders struggle with the most in the early stages is the career patience, right? They want to progress so much faster, but I'm here to tell you that it's going to take, one of the most common questions is, how long is it going to take for me to be profitable? And that depends, right? Everyone has their own journey. So I think we got to distinguish those two, and they're very important. So how do you define patience? We got to kind of give the definition here. The dictionary defines it as the capacity to accept or tolerate delay, trouble, or suffering without getting angry or upset. I love the fact that in this definition, they're saying that there's something that you have to wait through, right? Because if you're in a blissful moment, if you're on a yacht with your like whatever your metaphorical life is, you're living your best life, people aren't going to have to be told to be patient. They're going to soak in those moments. It's just patience is required when something isn't going properly. All right. I like that kind of definition to it as well, which brings a different dynamic to it. But so before we move forward, I want to talk about this as well. This is a very key concept here. When you think about patience, all right, what does patience imply? Is that you're waiting for something, right? If you're just sitting here and you're waiting, and I ask you, hey, Mark, what are you waiting for? And you're like, just chilling, nothing. That's not patience. That's wasting time, right? Unless you're relaxing, then it's not wasting time. But patience implies in trading that you're waiting for something. After working with thousands of traders, I could tell you that the number one reason of people not being patient is because they don't have a plan. They don't know what they're waiting for.
Exactly.
And if you don't know what you're waiting for, how do you know when it's going to come? And so there's no way to be patient if you don't have a set plan before you even tackle the day, let alone trading, but the day. Every single day you trade is a new day, new opportunity. If you don't have a plan, how will you wait? You're not going to wait. You're going to overtrade because we think when we don't have a plan, any trade seems like a good trade at the moment. But then when we go to review a journal, we're like, there's 36 trades here today that I shouldn't have placed. If I remove all the trades I shouldn't have placed, I'm actually left with zero.
I would. I think the last episode we talked about this with regards to fear of loss, but also, somewhat of a spillover into actual patience. And there was that one day where I had a whole bunch of trades that I talked about on the last episode. And, in reviewing that episode, you guys will know that when I reviewed my journal at the end of the day, there was maybe a handful of trades I actually should have taken. And the rest either came down to over trading or just not being patient. And, a lot of factors that led into me losing that patience and that we're actually going to speak on with you guys in this episode here. Right. So we're going to speak on, why patience is so important in trading. I mean, we kind of gave you guys a little teaser with why it's important, but we'll give you some concrete reasons why it's important. And then we're going to go into some of the ways that you guys can go about identifying, some of those triggers and working with them. All right. So
I know you got some good story or two little good stories here. I'm really looking forward to hearing this.
So we got some quotes with regards to patience, but I feel like let's introduce why it's so important first, and then we can hit them with the quotes here. So one of the reasons why patience is so important is because it will help you with a slew of things, namely your ability to manage your emotions, your ability to focus on the task at hand, stay mentally sharp, and your ability to make better decisions. All right? Because when you're patient, you're not emotional, and it really helps you in controlling the decisions that you make. Number 2, in the long run, when you apply patience, it can help you optimize your overall performance. Like I said, patience is something you got to get used to if you're going to be a trader. Whether you're at the starting of your journey, I guess in the middle of the journey where you're not necessarily turning a profit, but you're also not losing money. And if you're making money and you're looking to make more money utilizing your strategy, patience is going to help you do that. All right, guys. So patience is really, really important. Another reason why it's super important, as Georgie mentioned earlier, is when trading becomes challenging, when it becomes demanding, when you run into setbacks, you start facing obstacles. Patience is going to be the thing that's going to help you manage that situation and to overcome the challenge, right? Further to what we said in prior episodes of this podcast, right? If, let's say that you want to become a full-time trader because you want to provide financial independence for your family, right? If you align patience as one of the key values, right? If you align patience as one of the key values towards bringing financial independence to your family through trading, guess what? When times are going tough, when times are tough, and you've written that patience is what's required to get to that goal that you want to provide your family with, you're gonna have an easier time sticking with it than if you have no why. You know what I mean? You're
Yeah,
gonna have
absolutely.
a lot easier of a time sticking with it, being persistent because it's aligned with your values.
I love how you mentioned patience being a value. I'm a person who is often impatient. I've been my mom, everyone, kind of all my tutors and mentors when I was a young kid, school teachers, etc. That's one thing they always told me, that he's always trying to do something. He's impatient. And I've been called impatient before, but you know what? What really helped me be patient, Mark, and this is very cool, is that try to think about this. The only way you can be patient is if you're living in the moment, right? If you're trying to play out a future that hasn't happened in your life yet, how once you're super successful and you're going to have all this stuff, you could fast forward through that because it hasn't happened. If you're reliving a past moment, all right, you could fast forward it. You could be selective of which moment you choose to relive. You could recreate the past and the future, but you can't recreate the now.
Yeah,
And
I like
so
that.
if you're being patient, you're actually being present. And that's what's required to be successful, not as a trader in life. Being present is what patience really is. And I think that's the number one reason that it's the most important. It's helped by being patient. First of all, more strategic because I'm waiting for something to happen. I have a plan. I'm analyzing. But more importantly, it shifted me to the now because I want to be honest with you, I'm kind of that dreamer that's always used to think into the future a lot. But that future isn't going to happen if you just waste the present thinking about it.
Yeah, that's exactly true. So there, guys, there are some of the reasons why patience is super important, not only in trading, but in life as well. And that's a nice little segue into some of the quotes that we've pulled here with regards to patience and trading. So this first quote is from a market wizard named of Mark Weinstein. And if you guys don't know who the Market Wizards are, it's a great book. I'd recommend checking it out by Jack Schwager. I believe there's 2 volumes now. But Mark Weinstein was a successful trader. And one of the quotes he was quoted as saying with regards to patience was actually quoting a cheetah.
Wow. And this is a long quote, but you guys pay attention because it's super important.
Exactly. I'll try to enunciate my words as well as possible. So here goes the quote. Although the cheetah is the fastest animal in the world and can catch any animal on the plains, it will wait until it is absolutely sure it can catch its prey. It may hide in a bush for a week, waiting for just the right moment. It will wait for a baby antelope, and not just any baby antelope, preferably one that is also sick or lame. Only then, when there is no chance it can lose its prey, does it attack. That, to me, is the epitome of professional trading.
I actually love this quote. I love it. You know what? I've actually never heard it. I didn't read the show notes before. I was reading it with you because I want to kind of have a reaction aspect to it too. And I love it. That's a beautiful quote. What I really like about the analogy here that Mark's used is that it's a primal thing. Like, if this is life or death for the cheetah, trading isn't, but for the cheetah, it's life or death. And in a life or death situation, if an animal who's a born hunter is exercising patience, I think there's nothing I could say more to that than that's a huge learning lesson.
Yeah,
Right?
definitely. I mean, you can also liken, this analogy to maybe even like a military sniper.
Yeah.
A military sniper won't just hit their checkpoint, pull the rifle out,
Yeah.
get the spotter to give them their or not the directions, but the wind altitude and all that stuff, and take the shot. Right? They'll be there. They can often spend days, weeks, even months just in a single location waiting for the right moment to shoot.
That's wild.
Right? And
Just think about it. If they shoot and miss, now everyone knows where they are.
life or death, right?
Yeah.
Whether it's a cheetah eating or not eating, or a sniper, shooting to kill, or missing and then putting their own life at danger. Patience applies across all walks of life, right? So
You know what? To anyone who thinks trading is risky, this is a good time to rethink this too. I could literally name 1,000 things that are more risky than trading, including like being a chef. Your chances of being food poisoned, I don't know. I wanted to come up with a really ridiculous one.
That's awesome. And so here's a second one, again from another infamous trader, this time from Jesse Livermore.
Love this guy, Jesse Livermore. Ah, man. Well, I've learned a lot of lessons from Jesse.
Yeah.
It's very tragic how his story ends, but man, that guy's, yeah.
Yeah, I remember his was one of the first stories I remember reading when I started researching about trading and speculating, really, because he was really the grandfather of speculating.
What book did you read? Is it Reminiscence of a Stock Operator?
Yes, that's the one.
Yeah, that's the
Reminiscence
Bible,
of a
man.
yeah,
That's the Bible for traders. I highly suggest you guys pick that book up. It's a great read. Man, I love it. We could do an episode on reviewing the books, maybe.
Yeah, definitely. Maybe even, yeah, it'd be awesome. So here's the quote, guys. After spending many years in Wall Street and after making and losing millions of dollars, I want to tell you this. It was never my thinking that made me the big money. It was always my sitting. Got that? My sitting tight. It is no trick at all to be right on the market. You always find lots of early bulls in bull markets and early bears in bear markets. I've known many men who were exactly at the right time and began buying or selling stocks when prices were at the very level which should show the greatest profit. And their experience invariably matched mine. That is, they made no real money out of it. Men who can both, let's rephrase this one here, men and women who can both be right and sit tight are uncommon. I found it one of the hardest things to learn, but it is only after a stock operator has finally grasped this that he can make big money.
Wow. I love that quote. That's a fantastic quote. Another one to kind of, it goes somewhere with that is there are old traders and bold traders, but there are no old and bold traders, right? I love this because this is, this quote right there captures the essence of trading so well that like you could make a course on pulling things out of each sentence out of this. And in fact, we have at tradeproacademy.com. Not all based on Jesse Livermore's work, but everything as traders today we do is inspired by him to some degree. But you know what I really like about this quote, Mark, is that he's talking about the ego thing, catching the high or the low. We all want that because we think it's going to have the maximum amount of profit. But because you're taking such an early risk, it's the lowest degree of probability trade. And you're going to take it because it's a lower degree of probability. You're going to take it with smaller size. And in the end, you're not going to make much more than somebody who does it later with higher probability at bigger size. That's the best case scenario. The worst case is you blow out your account doing that. And that's why at Trade Pro, we call it the pineapple strategy, right? Forget the top, forget the bottom, cut those off. I don't know anyone who eats the top of a pineapple. If it's you, identify yourself in the comments. I'm going to send you a box of pineapples, just the tops of them. I'll send you my tops of my pineapples. But cut the top, cut the bottom off, and eat the sweet, juicy middle. That's what it's all about. It's a pineapple strategy. But man, this is such a good quote. I want to end the podcast right here. There's nothing more we could add.
But that's not what we're going to do. We're going to continue chugging along here. And we are going to give you guys now 7 facts about patience that you can use to create a happier and healthier life.
This is great. So this list is from Inc. magazine. It's a small entrepreneur magazine, and they initially wrote this article, and I thought it'd be really cool to share some of these with you. All right, check this out. Cool fact number one. According to Stan Floresco, psychology professor at University of British Columbia, having a wealthy reserve of patience can re-engage frontal lobe functions, meaning you could be less likely to act reckless and make poor decisions. Poor decisions and recklessness don't come out of patience, right? Calculated, calm decisions. Remember, in the now. Most people don't make poor decisions in the now when they're thinking about it, when they're patient. You're not going to patiently wait to make something disastrous happen. Because while you patiently wait, you're going to think through it, right? You're going to run it through a lot of your reprogramming, your subconscious, and you're going to do the right thing. So just by being patient, you could avoid disaster. And that is number one and probably the biggest reason that you should be doing this, is being more patient in life in general. Not just trading, by the way, guys. Be more patient with your spouses. All right? Be more patient in your relationships. Be more patient with your investments. Be more patient with your goals, your desires. Be more patient with your fears, with everything. You need more patience.
Number 2 here, guys, is your team at work will want you to have it. It meaning patience. One 2013 American study found that players who worked together and earned higher scores in strategy games also scored high in tests of patience. So, what we're seeing here is that, as we've been saying this whole time, exercising patience is important not only to, yourself, but also to the success of people around you, right? Because like Georgie said, if you're making patient or if you're making decisions in a patient state, it's very hard to make rash decisions, right?
Exactly. Yeah. You're not patiently going to cause disaster. Hopefully not. It's a whole different thing that we got to talk about there. Number 3, exercise patience more in order to procrastinate less. Researchers in 2015 let students choose to either receive a check for a small sum of money immediately or wait 2 weeks for a larger sum of money. The 43% of students who chose the latter, to wait longer to get more money, took less time to actually cash their checks.
Huh.
Isn't that interesting? Because I think that what plays into it here is that, first of all, it's a larger sum, so you're going to want to use it quicker. That's the logical answer. But the other one is because you were able to wait longer for it, no matter what the sum of money was, it's worth more to you, right? I bet you that if the sums of money were the exact same and they just stretched out and retested the experiment, I bet you the people that waited longer would still deposit it quicker because now it's a more significant investment for them. They've spent more time waiting. All right, and there's many studies that replicate this, even in children. The marshmallow test,
Yep, I remember that one.
Yeah, it's if you wait, you'll get 2 marshmallows, or you can have one now. The children who this is a multi-decade study. The children who took the 1 marshmallow immediately did, unfortunately, less better in life. I don't want to say worse; it's a bad word. So I'm going to commit. I'm an immigrant, so I don't have a firm command of the language, anyways. But
We get the immigrant blanket statement.
yes, the immigrant clause. And so the kids who had more patience were more successful. And I think that goes in terms of trading as well. I'm willing to bet the traders who do the most amount of returns and the most amount of profit have way less trades than people think. Right? In fact, I limit myself to 5 a day. Why is that? Because then every single one of them is worth more. Right? If I could trade an unlimited amount, every trade is worth nothing because I have an abundant supply of it.
And you would be a demo god.
Sim God.
And a sim god. So the 4th fact about patience is use patience to cope with stressful and upsetting situations, and you will experience less depression and negative feelings, according to UC Davis psychology professor Robert Emmons. That's interesting. This is actually my first time seeing these 7 facts, and that's actually very interesting. Using patience to cope with stressful and upsetting situations, and you will experience less depression and negative feelings.
Well, I know this is your point, but can I add something?
Of course, you can add.
All right. So think about this for a minute, because it's actually very fascinating. Is if you're in a stressful situation or you're experiencing a negative event, what do we typically do when we're in a negative event? We react as quickly as possible to eliminate that event, right?
Yeah.
But unfortunately, the quicker we act, the less options we have, right? You're going to go with the option that you think makes sense, but how do you know? You haven't even thought about it. So with patience, when you're in a negative event, if you're patient long enough, the longer you wait, the more options that come up. And the more options that come up, the more likely you are to make the right decision. That's what I think. That number 4, and I saw that, it actually goes in line with number 5. Let's have a look at number 5, because number 5 is the reason that I like these 7. Remember we talked about patience and living in the now?
Yes.
Having more patience can calm your mind and make you feel more gratitude, more connection to mankind and to the universe, and a greater sense of abundance. If business is getting you anxious, the key to feeling good may be to wait until a situation passes.
Huh.
We pretty much tied 4 and 5 together,
Yeah,
right?
4 and 5 come together. And to be honest, I think 5, I can definitely relate with 5. It's like if you have patience and something happens to you, not necessarily if you have patience, but if something happens to you and you're naturally a little bit more patient and kind of calm minded, then it becomes a lot easier to kind of to try to find the benefit or the lesson from whatever might have just happened to you, right? As opposed to, like you said, just acting rash, and just reacting in a rash manner to try to absolve whatever just happened.
Right. And we talked about that in the emotional awareness episode, right? It's like, the more patient you are, the more avenues you have, the more solution focused you become.
I like that.
Rather
Solution
than dwelling
focus.
in problems, right?
Yeah. So you guys should be seeing patience as solution focused. I like
And
that.
it's going to have a spillover effect in your life. Every aspect of your life right now could benefit from more patience. And, I know that that's a very blanket statement to make, but I challenge you to give me an example where that's not the case. And put it in the comment section of this episode, and we we monitor them and review them regularly. We'll respond to you personally. But I would love to, maybe I'm wrong, but to me in my life, everywhere where I've been patient, every time I've been patient has always led to the best decision and the best outcome for me.
Yeah. I would definitely agree with my trading journey, with like my trading life, that every time I focus on being patient, the experience that comes out as a result of that is more favorable
Yeah.
than when I tend not to be as patient. But
But what about in life? Would you say there's a situation where you think that not being patient actually helped out? Because look, I could be, obviously if you're in danger, don't be patient. Get out of the danger. But I mean, like, is there something that happened in your personal life that maybe being patient wasn't the best thing? Because there's a gut instinct as well.
yeah, that's kind of what it's kind of where I was going as well. It's like sometimes in some situations there's very, very few, like you said, like fight or flight response. Like
Yeah,
you
yeah.
see a grizzly bear coming at you. Hell no, I'm not going to be patient with that. You know what I mean? I'm going to be running away.
But I bet you if you try to be patient as the grizzly bear is running at you, you couldn't do it. Subconscious mind overrides, shuts off. You're
Yeah.
going to react. Like if you have the time to be patient, if you could decide to be patient or not, then you're probably not in danger.
Yeah. I mean, I can probably pull up one. Maybe, I don't know, maybe you're going auction hunting at storage units and you don't want to be paid. You see a nice unit,
You take it.
it looks like something good. You can take it. I don't know if that's the best example, but I just kind of felt like I wanted to find one.
Well, it was a challenge, and you are a competitive guy. You'll rise up to the challenge.
Yeah.
I love it. I knew you would. I'm like, let's see if we're gonna go on number 6 without taking a little detour here.
He got me. He got me.
But I don't know. I agree. There might be situations, but I think in trading specifically, I think we'll both agree that there's no situation where patience won't be beneficial for you. And I would challenge the listener, you guys out here listening to us. Thank you, by the way, for taking the time to listen to this episode. I'll challenge you to try it in your trading. Be more patient. That's why the first 5 minutes after the market opens, I do nothing. I wait because I want to see a little bit more. The quicker you act, the less information you're acting on. So if I'm going into a trade right away, what am I really trading based off of? I haven't seen anything yet. It's, we need more info. So that's my challenge.
I like it. So number 6 here, let's get ourselves refocused here quickly. Number 6 is patience can help improve your health. And so patient people are less likely to report health problems, from ulcers to headaches and even pneumonia, according to researchers. This is a tough name. Schnitzler and
It is
Emmons. Schnitzler and Emmons. You know what? I would agree with that as well.
It seems controversial. but-
Yeah, it does seem a bit controversial, but I don't know. I feel like sometimes you can be quick to what's it called when a doctor gives you a
Like a diagnosis.
diagnosis? That's it. It's sometimes you can be too quick to diagnose yourself.
Yeah.
I don't know. I mean, there's been a couple of instances with myself where God forbid you got to go on WebMD and
Oh man.
see why your throat's itching.
Yeah.
Right. And I tend to be one of those people. I tend to be a little bit more patient as it relates to health and stuff. And
Like my heart scare. I think I shared this other podcast. Where I remember when I went to
Yeah.
ER. We talked about this, right?
Yeah.
I remember that what I was experiencing was probably mild to probably mediocre anxiety. But what I diagnosed myself with, because I was impatient to let it pass, was a heart attack. And then I was like, I read everything. I'm like, oh my gosh, I'm feeling all that. And it says oh, and if your jaw hurts, it's definitely a heart attack. I'm like, well, it wasn't before, but it's starting to. I started feeling my jaw. I'm like, geez, I don't know. It could be hurting. So I agree. I think the other thing I think that patience is important in terms of health is that patience brings you in the now. And people are shown scientifically who live in the now, who meditate more, which gets you in the now, to have longer or better health overall in the long term. There's a lot of research that ties that. In fact, there are research. I don't want to disappear. I think I still have a lot of things to accomplish in this world, so I'm not going to go too far into this. Got to understand there's trillions of dollars in the medical industry that make money off of the cure rather than the prevention. I don't want to go too far into this, but I'll tell you this. There are situations that people with remarkable accuracy, I'm talking high 90%, could say, depending on the kind of cancer that you have, is linked to a certain emotional event. It's like lung cancer because it's close to the heart. Things like of that nature. They could tie these, and I'm not saying I believe it. I'm not saying, because this took a very controversial spin, but I think that by being more patient, it will promote better health overall. I'm not saying it's going to cure anything. Talk to your doctor, not WebMD.
If you guys know anything about us, we tend to go off course here and there, but nonetheless, we always bring it back.
We always come back.
Exactly.
These episodes that you guys hear are everything. You look at us looking at the monitor, but they're everything but what we wrote.
Yes.
This is what we're not going to talk about.
Pretty much. We put the show notes together to not talk about what's on them. Outside of fact number 7, which is reframing how you see a situation can help you cultivate patience. And I think this is kind of what we spoke on before, but let me finish off the quote. When you consciously examine your thoughts and beliefs, you can find yourself being less irritable and more able to regulate your emotions. This one's actually really interesting that it's in this list because this relates back to an email that we got recently.
Oh, also, I just wanted to mention, not that it's important or anything, but it is if I'm mentioning it, I was supposed to do number 7.
Okay, you can go ahead.
No, I'm just kidding. I'm kidding. Go ahead. Yeah, the email that we got. Yeah.
Yeah. So we got a really, really great email from one of the podcast listeners. And I'm not going to name any names or anything. You know who you are if you're listening. Thank you so much for taking the time to listen, number 1. And number 2, for taking the time to write such a beautifully crafted email. Really appreciated that.
Absolutely. Thank you.
And so this kind of goes in line with the email that we received. This individual was having certain issues with a neighbor, and based on the time that they grew up, the generation that they kind of grew up in, their parents were their parents basically grew up and went through the Great Depression. So a lot of the values that they had, I guess, accumulated or built up in their time, they kind of passed along to their children. And what's interesting here is that this individual mentioned that before really listening to the podcast, they would get, aggravated kind of easily. And that, when something didn't go their way, they'd have kind of a tough time accepting it, if you will.
Right.
Right. Where it would kind of, marinate. Really, they'd be thinking on it a lot of the time, losing sleep over it, etc. And then once they listened to the podcast and realized, excuse me, they had a psychological shift in essence, in the first 5 episodes, where they realized, they were kind of being not towards motivated, they were away motivated, and they were also living in effect. They weren't
living at cause. Yeah,
they weren't living at cause. They were living in effect. So once they shifted their mindset to living at cause, not in effect, they started to see, all right, now I have patience. Now these things that used to weigh on me so much don't weigh on me as much anymore because I don't give them as much energy.
It's amazing. What a relief that must feel like.
Exactly.
That must be a very freeing type of feeling. I'm so happy for you. And this is the exact purpose of the podcast. When Mark and I discussed the podcast, we're like, we're going to make some good traders. We're going to help people trade better, but this is going to change lives. That's why we're so excited about it. And awesome. I loved reading that email. And, good for you. I'm super honestly, I'm super happy for you, bottom of my heart. This is great. Now, if we take this and focus it back into trading, all right, we know that markets, if there's one thing that can make you impatient, frustrated, and angry, it's not your wife or your husband. It's going to be the market.
Glad you said that, not me.
The market can do it way better than anyone who you think is good at it. All right. And you have to understand that this is the nature of the stock market and the market as a whole. Because why? Who trades the market? Humans. What are humans? Emotional creatures. If humans are emotional creatures, therefore the stock market is it too an embodiment of the same values and characteristics humans have. It's an emotional creature. And emotion tends to pull you off the sideline of patience because it puts you in fight or flight response. Remember, we said one place where you can't have patience is fight or flight because you're going to react according to what gets you out of safety the quickest. And when a trader loses their patience, they become more likely to do things like overtrade, right? Trading too many times in a day, trading too many times in an instrument. Maybe it's a slow day, you're trading a lot more. You're just coming unprepared for the type of market condition. All right, chasing the market. They're patient at the beginning because they think it's risky. Then they see the market move up 10 points and now it's a good idea to buy because I've seen it happen. Therefore, another 10 points, but then it goes down. So chasing the market's a condition of impatience and getting sucked into intraday market noise and losing really the sight of the bigger picture. I think this is one of the most common ones is we focus too narrowly on too small of information or information that moves a lot. When we're looking to trade, what do we find attractive? The things that move the most because they capture attention, right? But you got to think about trading like being a pilot or driving a car. If you're driving your car right now, I guarantee you where you're looking at is the road. Otherwise, you've probably just crashed. So you're not...
Unless you're driving a Tesla.
Then you could just be sleeping. But you're not even hearing me at this point.
Yeah.
Hello? But if you're on autopilot and snoozing, you'll catch us later. But what I'm saying is that when you're driving and operating a vehicle, you're looking at where you're going. And I think you're not looking at your gas gauge. I think traders get sucked into the small things, and those small things create a lot of information that's controversial and also it's polar opposite. 1 second it's telling you buy, 1 second short, 1 second buy. If you're confused, of course you're going to do bad trades. And if you're confused, you're not going to be patient. And so I think those three things are big symptoms of a lack of patience. Overtrading, chasing the market, and getting sucked into the intraday and not having a larger sight of what the whole market, the context of the market, if you will.
Yeah, I agree with that. And, kind of further to that point, I think impatient trades, they can and they will lead to unnecessary losses, like Georgie mentioned. As a result of taking those unnecessary losses, you're more likely than not going to have some more stress to deal with. And guess what? Once you're dealing with unnecessary losses and added stress, that's really going to take a drain on your emotional energy or mental capital, however you want to frame that. Right? So these are some of the symptoms or some of the results that can happen when traders lose their patience throughout the trading day. Now, before we can provide some actual actionable tips to help you guys manage this patience in real time, let's discuss why traders lose patience in the first place. So I think Georgie mentioned it there. Chasing the market's one. That's really the first one I have on here. FOMO. For those that don't know, FOMO, it's fear of missing out. This is something that I would argue every single trader has experienced at one point in their journey. I know I experienced it a lot when I started. I still experience it to this day.
Same.
It's not as strong because guess what? I have more patience these days.
It sticks out more now. When
Exactly.
you get FOMO, you recognize it. But at the beginning, you think that you're permanently in FOMO, so it doesn't stick out.
Yeah, exactly. And that's kind of another a point that I wanted to make in the previous seven facts that we went over. But this is a good opportunity to do so. So FOMO, one of the things that I realized in my trading, and it's unfortunate that it had to happen often once I lost my patience, was whenever I lost my patience and then I reflected on it in my journal, right, where I'd lose my patience and maybe overtrade. Basically, what we just said is what I would do when I lost my patience. And then I'd look at it and then I'd reflect on it, and I would think, man, it feels so much better when I am patient. You know what I mean?
Yeah,
Like,
life
it feels,
is easier as
it
a
feels
trader.
so much better when I'm patient. And like I said, it's unfortunate I have to have, that realization after I lose my patience and get sucked into over trading, chasing the market, etc. But I think that was one of the things that changed for me. Was nowadays I can get a sense of when I'm getting impatient. You know what I mean?
Catch it. You're becoming aware.
Yeah, and I'm becoming aware, right? And there's certain times in the day, and I'm kind of spilling the beans here as far as some of the solutions, but one of the things that I tend to do is, if I'm catching myself wanting to take a trade, not because it fits my strategy, but because it looks good, the first thing that I think about is what it feels like when I'm patient. Right?
Wow.
What it feels like when I'm patient. And I won't go in any more into that right now, because
But I want to know. This is so good. I got a lot of questions. I'm
You're
going to
have
hold them
to
until the
stick
start.
around till the end here. So that was the first one, guys. FOMO is one of the big reasons why traders lose patience.
Can I mention one thing on it? I just came up with a formula, by the way.
Okay.
And this is better than E equals MC squared. I'm sorry, Einstein. I really respect you.
It's a
Lost
revolutionary.
patience equals lost capital.
Ooh. Huh. And this kind of leads into number 2. So another reason why traders lose patience is boredom. Right? There's boredom, and I kind of put in brackets here mental capital, which is kind of what George just mentioned, right? Sometimes it's the case, especially a lot more these days, where outside of scheduled volatility, such as crude oil reports on Wednesday, we know that's coming out. With Trump at the helm of the White House, since 2016, he's been on Twitter, and we've been getting a lot of wire or tape bombs
Yep.
coming in with volatility. It produces volatility, but it's not scheduled volatility, so we don't know about it. And when you're sitting down, especially as a day trader, and you see that kind of volatility, you automatically think, oh man, volatility's coming in, I got to make trades, I got to do it now. Quite often what we've seen happen is you get a quick burst of volatility on the back of algorithms, right? And then the market, more often than not, consolidates.
Right.
Right? It consolidates, and that is where traders get chopped up. Maybe you've been staring at the charts all day, and that was the first time it's moved. You're out of mental capital. You've been staring at the charts. You want to make your daily goal for the session. I got to get a trade.
Yeah.
Once you take that first trade, and if that first trade isn't part of your plan, or if it's a losing trade, that can lead to overtrading. Now, man, I got stopped out. This thing's got to go. Let me try it again. Before you know it, you've blown all your bullets for the session. Now you're watching the market as price is ripping towards the target, and you're not on board.
As soon as you're done with your impatient nonsense, the market's like, are you done? And then once you finish, it just goes.
Yeah.
Do you notice how it's so perfectly timed that once you lose enough money, or you just say, screw it, I'm not going to mess around anymore, then it moves?
Yep.
It draws you back in?
Exactly.
It does that by design. It does that because you're messing around. That's why it's chopping around. And then when you stop, the money that's smart comes in and takes it up.
And takes it out, right? And so that kind of leads into one of the third reasons why traders lose money is to make up for previous losses.
Oh, this is a huge one.
Right? So I know I'm guilty of this.
Me too.
Yeah, I wouldn't be honest if I said I've never done this, but
Me too.
Making up for previous losses is another big reason why traders lose patience. I know for me, I am the sharpest and my mental capital is at the highest before I take my first trade. Once my first trade goes out, I would say that my mental capital gets pretty significantly drained, right?
Yeah.
And so just knowing that in itself, I tend to put a really, really high emphasis on my first trade of the day. And then based on what happens, the result that happens from there, it may go one way or the other, right? If my first trade of the day, it depends on situations as well, right? If I've been waiting, we normally trade 2 hours on the session. If I've been waiting an hour and 45 minutes for this thing to set up, and I'm down a couple of trades and I'm waiting for this thing, I've had some pretty ugly results where I've just been trying to make up those previous losses in a market that's not moving.
Yeah.
In a market that's not moving, and again, that just leads.
Well, you're forcing the situation at that point, right? You're not doing trades because they make sense. You're doing trades because you want them to make sense for you. Doesn't make sense in the context of the market, but you need to do this in order to get a certain amount of money back. I'm guilty of this too. This is called throwing good money after bad money. And I do it too. Like as much as I want to tell you I don't after all these years, I'm here to tell you that it happens. Sometimes I'll have a loss. Next trade, I'll be like, but here's the thing. The difference between being successful for the long term and then still figuring your way out in this business is not actions or behaviors. It's catching yourself early on. There isn't going to be a time in your career where you're super patient. You're never chasing losses. Everything's good. You're methodical. Your emotions are turned off. That can only happen when you die. All right? Like, that's a little aggressive. But what I'm saying is there's never going to be a time in your career where you hit this ideal performance that you're envisioning. Give up that kind of notion. You're always going to have that. You're human. What we're doing is a very difficult business, and we're human, and we're trying to thrive. And so the difference between the trader you want to be and the trader that you are now is just being able to catch those moments sooner.
Yeah.
Right? It'll never be eliminated. I've done this. I've sent money after good money. I'm like, look, my next trade, I'll if I only make $300 that I lost, I'll stop. And then guess what? I lose another 300. That also happens for profit targets, by the way. If you're at 480, you could be like, just another $20. If I get to 500, I'll be done for the day. And I think that's even worse because now you're losing money you already do have. Either way, that's all. If you're looking to trade to make up previous losses, it's the wrong reason. That only ends one way: more losses.
Yeah.
Only one way in the long run.
Exactly. No, I definitely agree with that. And really, the final kind of point here is, having a fixed daily profit goal. It's a good idea to have an idea of what you want to make on a daily basis, but it's not a live or die kind of a thing, right?
Right.
It's not, all right, my daily profit goal is to make $500. The market conditions might not be right for that. The market might only give you, $200 or $300 worth of opportunity. It's if you have a fixed daily profit goal and you don't leave the trade station before you hit it, or you hit your daily, you should have a daily loss goal. All right.
Yeah.
I'm not saying you shouldn't have a daily loss. Definitely need to have a loss rule, daily loss rule, even a weekly and a monthly one, even a quarterly one if you want. Risk management is so important. But as far as daily profits, have some flexibility with this.
Yeah.
Have an idea of what you want to make, but it doesn't have to be like Georgie said. If your profit goal is $500, you're at 480. Doesn't make sense to risk a full stop, whatever that might be for some, let's say on one contract, full stop, be around $60-$70, right? Doesn't make sense to risk $60-$70 to try to,
to lose what you've already built.
Exactly. To lose what you've built up.
Yeah, go on. Sorry, I was just saying, how many millionaires on this planet do you think know every 2 weeks exactly how much money they're going to make?
None.
I'd say zero. You know what I mean? I think the notion of making a fixed income comes from the fact that you have fixed expenses.
Yeah. I think they can, at best, forecast it based on, historic trends or whatever happened last year. But a couple points to that. Number one, you need to have history first. So you have to be around for a while, right? And likely if you're a millionaire, you've been around for a while. You'll know what that is. But you'll never get the exact fixed amount. It's going to be variable no matter what it is. And even with the best forecasts, apologies for my French, shit happens.
Yeah.
You know what I mean?
100%. It's life.
Exactly. It happens. So at best, it's a dart you're throwing into the dark.
You're going for it. And, I don't think any opportunity worth having has a guarantee in it. I think that the issue is that we try to, when we switch to variable income, this could be a whole episode, by the way. When you switch to variable income, it's difficult because you don't know how much you're going to make, but you know how much you're going to spend, right? Your bills, your mortgage, your telephone bill, water bill, you know exactly how much it's going to be. And people will settle for enough to pay the guaranteed expenses and give up the opportunity to make unlimited potential income. They're so afraid of the fixed costs. I tell you, this isn't a fixed income business, but that's a great thing. I was about to have to create an editable moment there by Thomas. It's a great thing.
No, I definitely agree with that. So, just looking at the show notes here, we've entered a part that we've kind of spoken on already. So we will go into this final little bit here.
Love this.
So we've gone through, what patience is at the most basic meaning of the word. We've taken a look at how important patience is in your trading journey, how it relates, how there's two different types of patiences, right? There's patience towards the actual journey itself and patience in the execution and in the trade planning, right? Giving you guys a couple of fun facts on how patience can benefit you, not only in trading, but in your personal lives as well. Now we're going to wrap this puppy up with how you can actually increase your patience as a trader. These are going to be your actionable solutions here, guys. So if anything, this is when you should get that pen to paper.
Only if it's safe.
Only if it's safe. Or if not, we'll have these guys on the show notes for you guys. So make sure that you spend the next couple of minutes really listening in on what's going on. So step number one. I'm not going to use the one that's on the show note. I'm going to use my own number one.
Off script again.
Off script again. Who would have known? So one way to increase your patience as a trader, guys, is to know the value of patience in your trading strategy. You've got to know your numbers. Similar to that quote that I mentioned earlier from Jesse Livermore with regards to, him saying that, some traders try to catch the highs and lows, whereas some traders, they just try to catch the little pineapple piece or the middle of the pineapple, right? And so this always goes back to having, knowing what your strategy is, number one. I guess I am going back to one here. Creating a complete trading plan with trade qualifiers so that you know what you're looking for. Number one, you got to know what you're looking for. So you got to have a complete trading plan, and you've got to have trade qualifiers. If you have those qualifiers in there, it's objective. Now it's objective. What you're seeing in the market, you should have no emotional attachment to it because it's objective. If it's there, great. You might have an edge. If it's not there, you're not doing anything, right? This goes back to my point here, knowing the value of patience in your strategy. So once you have an actual trading plan and you have a strategy, you have to do your due diligence, whether that's back testing it in, back in historic time, wow, or forward testing it using a, simulated environment in real time. You've got to know your numbers. So if you know that, let's say, you've got maybe a 40 or 50% strike rate, but on the winners, you're winning, let's say 3, 4, 5 times to 1, right? You know that you can be patient waiting for your trades because it has a potential to pay you 3, 4, 5 times to 1, right? So what's the point of going around chasing, each small fluctuation in the markets when you have your strategy? You know your numbers, you know how much you get paid on average when you're right, you know how much you're going to be losing when you're wrong. Now you can have patience. You know what you're looking for because you've put that plan together. You know your numbers and you know what the actual value of patience is to you.
I love that. That's fantastic. I think that's the number one thing is having a trading plan. If you start with that, patience kind of gets forced there. What would you rather eat for dinner tonight, Mark? Salad or steak?
Both. Steak for sure.
You're going to have to wait longer for the steak.
Yeah.
They hold the salad back.
Yeah. My steak ate the salad.
Yeah. There you go. Number 2, how to increase your patience as a trader. Set a maximum daily trade limit. All right. I have 5. This creates the fact that every one trade is worth more if I can only do 5. If I blow through 5 trades in 5 minutes, I'm done for the day. And if I'm done for the day and then the move happens, I have no one to be mad at but myself. By creating 5 trades or limiting yourself, most instruments will be different, but for the most part, when you start out, 5 is a good number. That means that every opportunity is worth more, and I think that this is a great start. It creates opportunity costs for you, and it makes you eliminate the average trades and gets the good trades. Because again, you want salad, you could get it right away. You got to wait for steak.
Exactly. And kind of further to that point, there was a really, really cool trading exercise that I managed to stumble across in research here. And this was actually presented by Dr. Brett Steenbarger, who's an esteemed trading coach in this industry, works with a lot of prop firms, a lot of professional traders.
He's amazing, that guy.
He's amazing.
We're going to bring him on the show one day, I promise.
Yeah, fingers crossed. But we'll definitely do it because we've got the power of positive thinking. So further to that point, guys, with regards to setting a daily trade limit, this was a really cool exercise I found. And Dr. Brett Steenbarger basically suggested that you create artificial boundaries to trade less so that you can become more consistent. So, more or less what he suggested that traders do is to review their last month's worth of trades and to find the average number of daily trades, and then take that number and divide it in half, and to focus on taking no more than that amount of number on focus on taking no more than that number of trades daily until you become consistent.
Wait, what's the formula?
You just do it. Review your last month's worth of trades.
Yeah.
Step 1. Step 2, find the average number of trades
Per day or per month?
per the month.
Okay.
All right. So you can do it per day, per month, however you feel like doing it. If you're a day trader, you're going to go per day, swing trader, position trader, per month or per quarter,
Whatever the period is you're trading per that period.
Exactly.
Okay.
However you see fit. Then you're going to divide that number in half.
Okay.
All right. So if on average I'm taking 10 trades, I'm going to be focusing on taking 5 trades.
So, so we overtrade by a factor of 100%, double. We trade twice as much as we should.
Exactly. Well, not to say that you trade twice as much as you should, but the exercise in itself is meant to get you to focus on the highest probability setups.
Love
right?
it.
Like George said, it creates an opportunity cost, right? So when you've got less trades and you've got only a couple of bullets, right? You've seen this in Hollywood movies. I think one of the good ones is Pirates of the Caribbean, where Johnny Depp walks around with a pistol that has one single shot that he wants for I don't remember who it was, but he could have shot that shot anywhere, right? And he's waiting for that shot because he knows how important that shot is.
Damn,
right?
I'd hate to be the foe on that one.
Yeah, exactly. So this is the whole point of that exercise, guys. Set a maximum daily trade limit and focus on trading that amount of trades until you can become more consistent. Because I can guarantee you, when you stop taking every single trade and you filter out the highest probability, the highest quality setups, you're going to see that, making money is the easy part. You're going to see that keeping the money is going to start to become easier. Right.
And that's the more important part.
Exactly.
Keeping it. Making it's not a problem. Keeping it is the part you got to focus on.
Exactly. And so we'll get on to number 3 here, and that's understanding that being a trader isn't about being in a trade.
Love it.
I don't know how many times we mention this in the day trading room. I'd say almost on a daily basis. There's this misconception that you've got to either be in a trade or you've got to have a whole handful of trades in a day to be considered a trader. When that's further from the truth. You ask any professional trader, you look at any successful traders on social media, they're rare, but they are there. And they all say the same thing. Having no position is a position.
Absolutely. In your corporate career, did you ever, on the clock, not work? Did you check your email or do something else? Or just do nothing for like 2 minutes?
Oh, yeah.
Me too. Did you get paid?
Oh, yeah.
Therefore, not doing something is also means you're getting paid. Same thing in trading. Waiting for the trade doesn't mean that you're not a trader. In fact, you are a better trader. It's not about less is more. So being a trader isn't about being in a trade. Write that down somewhere. That's huge.
What's another good one here? Implementing an emotional stop or a mental capital meter. George, I think you put this one in here, so I'll let you explain that capital meter.
Yeah, I have a mental capital. Every day I have a number, and it needs to be above a certain number. This mental capital is, how do I feel? Right? Anything could impact this capital, not just trading events. It could be outside life events. And I really expand on this concept in episode 12, I believe, which was emotional awareness, or 11. That's 11.
Yeah.
11 was emotional awareness. You need to listen to that episode for that because we're pushing the boundaries on the light. It's probably the longest episode ever. But basically, for me, if I fall below a certain threshold, I'm not mentally sharp enough to continue, and I stop myself out. Even if I just walk away for 10 minutes, how do I rebuild my mental capital? Some days my mental capital is naturally more. I'm well rested, I'm well fed, I've gone to the gym, everything feels great. I'm riding a euphoric wave. I start with a 10 out of 10. Other days I walk in with a 3 out of 10. I don't even have enough mental capital to start trading. I got to be at least at a 6 to put capital on the line. And if I fall below 6, whether I start below there or I get below there throughout the day, throughout the course of the day, I'm done. So I have a mental capital stop.
Awesome. Another good one here. This is something that I know I do personally. I'm pretty sure you do it as well, George. And that's being able to really pinpoint and document what triggers you to lose patience. And building safeguards, if you will, so that you have an action plan to stay patient during those scenarios, right? So I think I mentioned it in the last episode. I have, a couple of safeguards that I've built for myself with regards to staying patient and to not overtrade. And I'll give you an example of one just to summarize is when I take a trade, whether it's a winner or loser, when I close it out, I'll usually wait 2 to 3 minutes. I'll review the trade right away, right? That gives me, 2 to 3 minutes to review. Would I take this trade? I'll grade the trade based on my strategy. And then if I'm happy with it, then I'm okay to start looking for the next best one, right? If I'm not happy with it, then I'll probably walk away for a couple of minutes. Usually, I'll go for a breath of fresh air. You guys know me that way. And that's one of the things that I like to implement. I know that if I take a trade, and especially if it's, a good quality trade and I get stopped out on a high tick and then it goes back down, I know that myself, I tend to lose patience with that. That frustrates me. And as a result, I tend to overtrade. I start to try to force trades on the market. And, in my experience, hasn't worked out the best for me. So I've got safeguards in place to prevent, breakdowns like that from happening. So that's another big one, guys.
That's a great one. I like them.
Pinpoint them, document it, study it, study what triggers you. Because, if there's anything that can make you money in the market, it's identifying, like Georgie said, it's identifying these triggers in real time and being able to catch yourself and fix that before actually acting on it, right? Georgie, I'll let you take this next one because
the pre-open game plan is about marking out a line in the sand for the transition between the buyers and sellers. All right, and then using an if-then scenario. So let me give you an example. You wake up in the morning, you sit down at the computer, you've done your pregame routine, and before the market even opens, you're wondering, should I buy or sell? All right, well, there's no answer to that. So the way we talk about this pre-open game plan is set a level. Above this level, buyers are in control, I'm going to start buying. Below this level, sellers are in control, I'm going to start selling. If it's not that clear, then in the level in between, I'm going to do nothing. Right? Because it could be a range. In this range, I'm doing nothing. Above this level, I'm going to buy. Below this level, I'm going to sell. Now you're waiting. If it does this, then I'm going to do this about it. Because now you have a plan that guarantees you have patience. You wait for that plan. And if you know when your triggers are that gets you out of patience, then you could catch those triggers, bring yourself back into patience, and then continue waiting for that scenario. So I love these if-then scenarios about the market. You could be long and short at the same time. How? If it crosses this level, then I'm going to buy. If it crosses this level, then I'm going to sell. If it's at neither of those levels, I'm not doing anything. I'm waiting. So this is like dictating sentiment based on if certain criteria happen. To me, this is super powerful.
Exactly. And the reason why I like this one so much is the pre-open game plan. Essentially, you're putting together the way that you're going to act before it happens, right? So it's never a good position to be in when, a scenario happens and you don't know how to react to that. You have to figure that out in real time. That's not the position you want to be in, especially when trading, right? So having a game plan before the market even opens, that way, like Georgie said, you mark out a line in the sand for where you want to be buying above and where you want to be selling below, and staying out of the middle, because that is what's going to give you the patience that you require, right, to catch those high probability setups.
Love it.
Exactly. So number 7 here is reviewing your Hall of Fame trades before you start the session. And this one has a little bit more to do with visualization, but I still think it's a really important one here. It gives you sort of a visual refresher of what you're actually looking for. So what a Hall of Fame trade would basically be any trades that you've made in the past, where all of your qualifiers were there. It basically worked out textbook. Think about it this way. Anything that's in your Hall of Fame trades should be what you would consider an absolutely textbook setup. A setup that if you saw that happen or form in real time, you wouldn't even have to think about executing.
A setup you want to tell your friends about.
Exactly.
The ones you see on Instagram that are posted, because those worked out.
Exactly. The setup you're going to be telling your bank teller when they're asking you where this money's coming from. Right?
Yeah.
So that's a huge one. And I personally keep a Hall of Fame of trades that were, awesome trades where everything worked out. All my qualifiers were there. You get filled, you don't take any heat. It goes almost directly into profit. Trades like that where you identify, some of the variables that go into what made that trade so good. Maybe it's you had, I don't know, it could be a number of factors, but let's say you had a really strong level of support. Let's say you had like a pivot resistance or something like that in there. You just had a whole bunch of confluence supporting that trade idea. And if you can take those Hall of Fame trades and review those trades before you actually get in front of your screen in the morning, visualize on, what that experience felt like to you at the time it happened, visualize what it meant to you, right? And then if you can do that, now you're going to be primed when the market opens up to be looking for those opportunities.
Boom. Not the Hall of Fame not only visually primes you to know what you're looking for, it also puts you in the mind state of when you succeeded in those trades, how you felt, and it brings that feeling to now. That way you could, in this mind state, continue to repeat those trades. And they're all going to be Hall of Fames.
Exactly.
I mean, that's never possible. It's kind of a joke. You're going to have more Hall of Fame. A larger percentage will be Hall of Fame trades, but they ain't all going to be Hall of Fame. Trust me.
It would be nice. It would be nice.
Ask me how I know.
All right. And the final one here, guys, is you can utilize price alerts. All right. Just because you're a day trader does not mean you have to be sat in front of the screen for the whole, an 8-hour session?
Yeah.
Right. You don't have to be there for the whole 8-hour session. Even in our style of trading, we only trade the first 2 hours. You don't really have to be in front of the screen for 2 hours. You can, like I said, if you're doing your pre-open game plan, guess what? You've got your line in the sand for the bulls and you've got your line in the sand for the bears. Set a price alert on those levels. That way, you're not even going to be in front of your screen while the market's trading in that little chop zone in the middle. We'll call it the no-go zone or whatever you want to call it. Danger, no-go zone, do not trade here.
The 50-yard line, the battle place. You never know, right?
Exactly. You never know. And so you can utilize price alerts so that you get notified when the market has actually traded into one of your key levels, so that you're going to be looking at the market. You're going to be looking at the context when it's at a location that means something to you, right? When your edge is present, that's when you should be trading. You should not be trading if there's no edge. No edge, no trade. All right, guys?
Another formula.
Exactly. Another formula. So it's as simple as that. And we're going to wrap this guy up because this is probably the longest one we've done so far.
It officially is.
It officially is. There we go. Georgie's got the timer. He's given me the thumbs up. And so what I wanted to leave you guys with here is that, your willpower in the real time is not what is holding you back from the success. All right. It's about the solutions or the safeguards, like we said, that you have to design and incorporate into your trading, which is going to keep you patient and keep you ready to execute on those low-hanging fruits when they become available. All right, guys? And so what you do before market is open and after the market is open is ultimately what's going to dictate, your success or failure in this industry.
I love it. And, this is one of the longest episodes, and the gems for the trading application came at the end. So if you heard them and you're listening this far, congratulations. You've improved your patience. This is by design.
Exactly. So, guys, that is going to be it for today's episode. I really do hope that you guys enjoy this one. Thank you so much for taking the time to listen. But we got some favors to ask of you guys. If you can think of one person in particular who would find today's message really helpful on their trading journey, please do us a big favor and share this episode with them. Also, if you guys are enjoying listening to this podcast, and if you've made it this far, I've got a good idea that you might be. Please leave us a rating and a review on iTunes. That really, really helps us out, and it shows us that you guys are enjoying these episodes that we're putting together for you guys. So until next time, good luck and good trading, everyone. This has been Mark
and George from Trade Pro Academy.
Take care.
Goodbye.
Thanks for listening to the Mind Over Market podcast. You can find us at tradeproacademy.com. You're listening to Mind Over Markets, a podcast on trading psychology to help you build a bulletproof mindset. Here's your hosts, George Papazov and Mark Borscht.
Hello, trade pros, and welcome back to another episode of Mind Over Markets. My name is Mark Borscht, and I'm here with
George Papazov,
my lovely co-host. And in today's episode, we're going to be talking about watching the P&L when trading. Now, before we get into this episode, George has got something exciting to share with you.
Awesome, Trade Pros. Welcome. We've been out of the studio for a little bit here. Excited to be back on track with this podcast. And before we get started today, I want to tell you a little bit about Trade Pro Academy. Today, we're going to be talking about watching the P&L, watching the balance and the markets. I think one thing that's important as you listen to this episode is to ask yourself, am I focusing on the right thing? Because if you're constantly watching the profit loss as it's moving up and down, the most important part is to rather focus your attention on seeing the market and being part of a community as a whole. At Trade Pro Academy, our community trades daily, live, and we have a great community of successful, professional, consistently profitable traders, and we're super proud of the group. It's not about us, it's about them, and I'm very humbled to trade with them daily. So come on out and try it for yourself. We'd be happy to chat with you, and I can't wait to introduce you to our trading community.
Beautiful. Thanks for sharing, Georgie. So guys, make sure you check out tradeproacademy.com. None of this would be possible without them sponsoring the show. So let's get on with the episode here, guys. Our last episode was episode number 13, and we spoke on cultivating patience for trading. And this one today builds somewhat on cultivating that patience. More so, this is with regards to watching that P&L while you are trading. So what does that actually mean, right? Watching your P&L when trading is kind of a term that gets thrown around quite a bit in this industry, but not many traders know what it actually means. So when we say P&L, what that stands for is simply profit and loss, all right? That's your profit and loss. And what a lot of brokerages offer on their platforms is a column for the P&L, for the profit and loss, that displays in real time on your trade station your realized and your unrealized profit and losses for the session. So that's all fine and great, but what kind of an issue can this potentially present? Well, to the newer trader, it can really open up